Good morning. Welcome one and all. So this is the fourth main subject we are going to start today. You are all aware what actually the four mains are. One is business regulatory laws. Second one is applied financial accounting. Third one is indirect taxation. And the fourth and the last limb is direct taxation. What is direct tax? A tax which is directly levied and collected by the government from the citizens is called direct tax. Okay, now Madam will throw the light on your topic. Welcome you, Madam. CA Pooja, Madam. Thank you.
Thank you, sir. So overview, so my direct tax is consist of my 298 sections and 14 schedules and my annual finance acts, where every year in our finance bill will be getting changed, and income tax rules, circulars, notification, legal decisions for computation of income. So first, initially, we will determine the residential status, whether the individual or a company is resident, non-resident, or not ordinary resident. Right? In classification of income under the heads, it's whether income from salary, house property, business income, capital gains, or income from other source, right? After determination, classification of whatever the income, then exclusion of income which is not chargeable, exempt. So exempt income, example, agriculture income or share from partnership firm. The next computation of income under each head will be discussing. Then clubbing of income of spouse or minor, where the example is like where we have transferred the share of income in order to avoid the tax, or investing in the name of minor where they are not incapable of earning. In such case, it will be clubbed with the person who's guardian of the minor, whereas spouse, transfer of the property, earning the income. Okay, then set off and carry forward of losses, computation of total income. After gross income, the deductions from 80C to 80U, total income, then applicable rates will be calculated on that, whether surcharge is applicable if you reach the specific turnover, sorry, income, then health and education cess, then advanced tax and TDS we'll be discussing. After that, tomorrow's session will be regarding assessment procedures. So legal status, unless you are an individual, HUF, company, firm, association of person or body of individual, local authorities, artificial person. Okay. So individual person can file in all the forms, right? Except ITR 4. Sorry, ITR 5. Right? Yes or no? ITR 5, not ITR V. If my income is ITR 1 means ITR 1 salary, ITR 2 if my income, okay, if I have more than one house property and my income increases 50 lakhs, ITR 2, and ITR 3 business income where I'm not showing my presumptive incomes, ITR 4 presumptive income, ITR 5 trust, BOP, AOA, yes, and ITR 7. ITR 7 for trust, right? HUF, similar. Company, which firm? Company, Yes, ITR 6. What about partnership firm? Partnership firm. Yes, ITR 3. If you are declaring in presumptive, ITR 4. AOP, ITR 5. Local authorities and trust, ITR 7. So this year in our budget, there is a changes. No, right? Changes. So income for an individual will be calculated, no, tax for an individual will be calculated as per the schedule, and this is our old regime, and new regime we have an additional. Okay, initially how much we had the what rebate? What was my rebate value? Rebate initial. In old regime, what is the rebate? To how much? Yes, 12,500. So I had up to 12,500. Here, new regime, I'll get up to 25,000. Then that is rebate up to 7 lakhs. But the condition is you're not supposed to claim, you're not supposed to claim deductions. And in that exception for this year, you can claim deduction under section 24B up to 2 lakhs. Yes or no? Can I claim house property deduction exemption? Yes, no. Why? It's a new regime. Then the slabs also varies up to 3 lakhs nil. Then 3 to 6 lakhs it is 5%, and 6 to 9 lakhs it is 10%. 9 to 12 lakhs is 15%. And 12 to 15 lakhs is 20%, and above 15 lakhs 30% as regular. But here about 10 lakhs I used to pay at 30%. Right? Clear? So small. So if I go with the effects of the regime is that in old regime I was able to claim my HRA, LTA, leave and travel allowances, ATC, ATD. But here in new regime, I'm not eligible to claim. Then rebate. So my effective tax rate is after my 5 lakhs. If I cross 5 lakhs, I'm liable to pay in old regime. But in new regime, if I cross 7 lakhs, then rebate is 12,500, 25,000. Then standard deduction, 50,000 is allowed here, and new regime 50,000 is allowed here. Example, if an employee receiving a salary of 7 lakhs 50, so for him up to 7 lakhs 50 it is exempt. Okay. Then a family pension is allowed in the both the cases, and perquisites for official purposes, okay, is allowed as deduction. If the exemption is available, then self so interest on home loan on self occupied or vacant, it's not allowed. Okay. If it is interest on loan which is let out property, allowed in both the cases. Clear with this? So only 24B they have given. So while filing ITR form in new regime, please take care regarding this. If you are claiming interest on housing property, housing loan, if it's showing as self-occupied, then directly it is disallowed. Okay. Then for let out property, it is allowed. Then deduction under EPF, LIC, ELSPF, etc., it's not allowed. But whereas NPS up to 50,000, whose contribution? Employer contribution is allowed as deduction. Then all contributions to Agniveer Corpus Fund, it is allowed. Exempt on gratuity, it is allowed. Okay. So main in new regime, so any perquisites, then interest on let of property, then employer contribution on NPS and all other donation made to Agniveer Corpus Fund, exemption on gratuity. These are the cases where deductions are allowed, hence not allowed. Clear? Clear? Yes, we'll be discussing in salary regarding NPS and other things. So we'll move forward. On the calculation of tax liability, we'll be paying the health and education cess at 4%. Then if your total income increases with respective slabs, then you'll be paying the surcharge on that. So discuss with ITF forms. Okay. Residential status. Residential status. First, the person who is permanent resident in India, so he is resident, ordinarily resident, resident in India for a minimum of 182 days in a year, or resident in India at least 365 days in immediate preceding 4 years. 4 years and minimum 60 days in a current financial year. So altogether, cumulative for 4 years, it should be more than 365 days. Then next, minimum 60 days in one financial year, you should be there to be known as resident. Okay. Resident, not ordinary resident, has been resident of India for at least 2 out of 10 years immediately previous years, then has stayed in India for at least 730 days in 7 immediately preceding years. Therefore, if any individual fails to satisfy even one condition, he would be an resident but not ordinary resident. From financial year 2021, citizen of India or a person from Indian origin who lives India for employment outside India during the year, he will be resident and ordinarily resident if he stays in India for an aggregate period of 120 days, or however, this condition will not apply if his total income other than foreign source exceeds 15 lakhs new. Okay, from financial year 2021. Okay, also citizen of India who is deemed to be resident in India with effect from financial year 2021. Okay, will be the resident and ordinarily resident. Okay, so where his staying is his aggregate stay 120 days, 120 days. Then his income exceeds 15 lakhs. His income exceeds 15 lakhs other than foreign income. In such case, he is an resident of India. Clear? Who is non-resident? So an individual satisfying neither condition of A and B. Okay, he is a non-resident. Okay, then next. This is for a resident, a small chart where if a person should be called as resident, he should stay more than 182 days. If he's staying less than 182 days, and my first condition, less than 182 days, he's straight away a non-resident. Okay, then 182 days, 120 days or more and less than 182 days. Okay, so 120 to 182 days, where my first condition he is not satisfied, either he is staying more than 120 days, okay, then a non-resident, then he should be an Indian citizen or person of Indian origin, means he has left India for employment, and is income less than 15 lakhs, okay, income other than foreign source, foreign source, resident but ordinarily resident. Clear with this, with the chart? So if one condition, if his income increases more than 15 lakhs, then he will be known as resident. Straight away he'll be the resident. So this case applies where NRI comes with his income, Indian income, Indian income to file income tax. Now even an NRI holding a PAN card, okay, if any income which arise, he is getting notice. So example was one of my relative, his sister was an NR non-resident. So he started to, she used to come stay for certain period and go. He used to he had given the PAN card. Okay, he is a software engineer. PAN card for taking an HRA. But this had shown in her in her SFT transactions. In her income, I mean in SFT, sorry, income, AIS. And she was getting a mail that file your return, file your income tax return. In such case, okay, when she received a notice, what actions to be taken? Yes, right? Now our IT system is robust. If someone else, nothing will happen like that. If we are like submitting someone else PAN, even though they are not in India, such case, which person has claimed the HRA from which company, they're showing that income is received. Okay, so that was reflecting in her PAN card. Then she became ordinary resident. She was forced to file the return. She need to file, right? Otherwise, whatever the on and what best judgment, the tax can be deducted from her account, Indian account, right? Calculate. Yes or no, sir? Yes. As they were never showing the income. So whatever the inflow from foreign, so they used to make any accept in the name of her mother. So that just because of one income, now she have to show her property. Then in that person, deemed person was that person. NRI. Okay. Then give me the examples for exempt income. Other than agriculture income, give me other examples. Which on day to day we would be coming across, right? Exempt income. No answer. Share of profit, yes. LIC matured, yes. Gratuity, yes. Interest on PPF, yes. Yeah, if he is not declaring any income, see, even NRO also has a PAN, yeah. But if he's not declaring any income, it's okay. But nowadays, to claim HRA, if they are giving the submitting the PAN, auto pop-up mail, it will go to the NRO, NRIs to file their returns. This case, which in person had handled, deemed person, they gave a notice. On first notice, they didn't come up. They got a normal regular mail that you need to file your return. The second, because of her bank transactions and the person to whom she had transferred, these were taken into consideration. The next, the property was purchased, but but she had given the power of attorney, and the understanding was there. Okay, then how? Without an house property, how an NR can earn an house rental income? Yes, exempt LIC amount, leave salary. Yes. So in exempt income, the first income is my agriculture income, which is not included in the total income of the assessee. Okay. So if my question is, if my agriculture income exceeds 2,50,000 or if it's more than 5,000, do I need to pay the tax? Huh? Need to pay the tax? Yes. If it, okay, even though after 2,50,000, you have up to 5 lakhs rebate. No, 5 lakhs. 5 lakhs 50. Yes. Yeah, I need to pay. My first condition, if it is less than 5,000, it is exempt. But when my income is, where my income is more than 5 lakhs, say my agriculture income is 3 lakhs and 5 lakhs. Other is business income. So total is 8 lakhs. I can't show totally exempt, right? First, I need to calculate as if there is no agriculture income. So on 8 lakhs, I need to arrive on the tax. Then agriculture income is my 3 lakhs, right? Plus my basic exemption limit is 2.5. So it amounts to 5.5. On this 5.5, I need to calculate, right? Since my income is exceeding 5 lakhs, there is the rebate cannot be claimed, right? So that amount and this, and from the total tax liability minus agriculture plus exempt limit. Okay. So balance will be the tax liability to be paid. Clear with this? So a question where, one second. Yes. Is my screen is visible? Nowadays, at least majority will have agriculture income, right? Where they'll be earning in 3 lakhs, 5 lakhs, 8 lakhs. Yes. I have both agriculture and non-agriculture, where I'm earning 3 lakhs and 5 lakhs per annum. Such case, I have total income of 8 lakhs. So, to 2 lakh 50, I'm considering in old region. If it is purely an agriculture income, exempt. Sir, I myself earn an agriculture income. Okay, so where I have planted coconut trees, arcada, and I'll have a seasonal crops also. Okay, in such case, and I have my professional income also. So my agriculture income, whatever I receive in a year, 8 lakhs to 10 lakhs, cannot be purely exempt, right? 8 lakhs to 10 lakhs and my business income. When it is purely exempt, unless my owner is someone else, right? Yeah. Agriculture income 3 lakhs, non-agriculture income 5 lakhs. My total agriculture income is 8 lakhs. So I'm following the old regime. Okay. If I follow new regime up to 7 lakhs 50, it's an exempt. Only on 50,000, right? So up to 2 lakh 50 exempt, 2 lakh 50 to 5 lakhs, 12,500, then 5 to 8 lakhs. On balance amount 60,000. If purely an agriculture income plus my maximum limit is 2 lakh 50. So total is 5 lakhs 50. On 5 lakhs 50, if I calculate the tax liability, it is 22,500. Then tax liability will be 72,500 minus 22,500. The balance tax liability on that cess of 4%. Then you need to pay 52,000 the tax. Clear with this? When you have both agricultural and non-agricultural income. Clear, right? So we will go back. Yes. So income from Indian agriculture land. If I had purely only an agriculture income, then it would be exempt. But I have other business income also. In such case, option B. Okay. Then income from foreign agriculture land is fully taxable as income from other source. Instead of doing an agriculture business, I'm doing in foreign. So whatever the inflow, whether it's an agriculture income, it is taxable. So I'm growing, okay, tea, coffee, rubber. Okay, in such case, only growing, okay, only growing, it's an agriculture income, fully exempt. But only manufacturing business, I'm purchasing from the farmers, then it is fully taxable as business or profession. Growing and manufacturing in a composite income. So I'll grow and even I do manufacturing also. In such case, okay, the rubber agriculture income is 65%, business income will be, you need to declare as 35%. Coffee, grown and cured, only the two steps has been taken place. Then my business income will be 25%. But if grown, cured, roasted and grounded also, roasting also is done, then my business income will be 40%. But tea, 60-40. The question may come on this also, MCQs or any descriptive. See, unless used for commercial purpose, agriculture income land is exempt. Then the waste for agriculture, rent or revenue derived from the land situated in India, used used for agriculture purpose. Then income derived from such land by agriculture or performance or process ordinarily employed by or cultivated, receiver of a rent in kind of render of produce fit to be taken as taken to the market, and for the sale of such agricultural produce into the market, income derived from farmhouse. Clear with this illustrations? So what about the yearly lease received from agriculture land? Is it taxable? Taxable or exempt? Yearly lease, I mean rent amount. Exempt? Yes. How taxable? Agriculture land. I'm not giving for commercial purpose. I'm giving for agriculture purpose. Yes, it is exempt unless given for commercial purpose. Okay. So normal. So the examples are sale of seeds, flowers, creepers, grazing cattle required for agricultural activities. Okay. If I had constructed a shed for rearing of horse, it is taxable in both in GST and even in income tax. Okay. Then other illustrators, you can take a look. For my non-agriculture income from breeding and rearing of livestock, poultry farming, fisheries, and income from dairy farming, butter, cheese making means salary received by an employee from any business having agriculture income, and dividend received from company engaged in agriculture operations, income from salt produced by uh, flooding the land with seawater, interest received by money lenders in the form of agriculture produce, profit on sale of standing crops after harvest, where such crops were acquired through purchase. Where I'm doing the trading is done. Trading that is on for commission basis, royalty income from mines, remuneration to directors from the company engaged in the agriculture business. The provision holds good even when such remuneration is on the basis of certain percentage. So, income earned by cultivation from conversion of sugarcane raised on own land. So, income to the extent to which income is relatable to the conversion only. See, just a sugar cane. Okay, I've grown. I'm transporting to the market. Then it is exempt. But I'm converting into sugar and jaggery. That conversion, it will be a business income. After conversion, whatever it's like the produce will be transported to the market. That will be business income. Interest on arrears rent receivable in respect of agriculture land interest. Okay, I'm not saying the rent. Income from land situated outside India, annuity received by a person in consideration of transfer of agriculture land. Income on supply of water for agricultural operation is a non-agro income. The provision holds good even when such income is received in the form of agriculture produce. So income from sale of trees, grasses grown spontaneously. So I've listed, yes, sale of livestock is taxable. So rearing of horses, right? Next, other exempt income, when income received from the member of HUF. In such case, it is exempt. A few list where the income is exempt, that is share of income of a partner's payment from payment from Sukanya Samriddhi account. Okay, it is exempt. So after 18 years to your daughters will be receiving the amount that will be exempt. Award for literacy, scientific and artistic work. Okay, examples. Okay, I'll be sharing the PDF in that you can take a look. And payment to MPs and MLAs. Okay, whatever the allowances, I'm saying not the salary, allowance, daily allowance, constituency allowance, like sitting fees, like when they are in the parliament, and the constituency allowances of MLAs. Okay, these will be exempt. So, associations, doctor associations, then Federation of India, like that, or welfare, women and child welfare, or any like for any development person. So if he's an ex-MLA or MP, is he going? Why they'll give the daily allowance? Question is, ex-MLA is going sitting in the parliament? No, right? Yes. Then how we can claim the exempt under that section? Unless he comes with that specified category, he can't. He's or 30 years advance rent paid in a single payment received by agriculturist. It is taxable. So after 30 years he can purchase, right? Lease means it is returnable or non-returnable. It is only received pension. He will get pension. So see, in our side, if you go for a yearly lease, like 30,000 per annum, in that case, we are not returning. So when we need a lump sum amount, say of 5 lakhs, 6 lakhs, where we are leasing for more than 1 year, in that case, I'm returning the amount. So you're saying for 30 years, 30 years, what, it is not returnable. An upfront of an amount, right? Yeah, it is used for agriculture purpose. It is exempt. Otherwise, it is taxable. Okay, yes. Insurance income received from Reliance for putting towers in agriculture land. I'm giving this space for commercial purpose. Commercial purpose. It is taxable. So when my first condition here is, you see, um, what are my agriculture income? Agriculture or performance of process accordingly employed by cultivator or receiver of the rent in kind to render the produce fit to be taken to the market. I'm giving on rent, right, for the sale of such agriculture produce. Okay. In this case, my rent income is exempt, right? Illustration is here. Then, which is not agriculture income, I'm saying interest. Interest. So, interest, whatever the interest is not an agriculture income. Okay. If it is returnable, so say for 30 years, 30 years of lease, I have taken 20 lakhs. Example, 20 lakhs. Okay. Then that is lease is an exempt, but this is an returnable item. But 20 lakhs I'm left for interest. I'm given on interest to some other person. Okay. So this interest is taxable. If, see, if for 30 years yearly agriculture produce or yearly rent which is not returnable, if I'm receiving 20,000, where interest on 20 lakhs, I'm receiving say 40,000 per annum, which I love. Simply I will give on a lease, right? Lease for 30 years. Then I'll return. In that 40,000 I'll be receiving. Right? My interest part is not returnable. Okay. So income of local authorities, research associations, newspaper agencies. These business incomes are exempt. Royalty income or fees for technical services received from national technical research organizations. Income of electricity and regulatory commission and funds, recognized funds. Income of provident fund, superannuation fund, gratuity fund. Then income of employees, state insurance fund, income of members of scheduled tribe Sikkim, individual Sikkim. Just have a look. That's it. Okay. These are the income which is exempt, mainly of associations and federations. So income of Indian Strategic Petroleum Reserves Limited. Okay, Reserves Limited. This company income is exempt. Okay. Okay. See, I have business income, okay, of 10 lakhs. Okay. In that, exempt income is of 4 lakhs and taxable income is of 6 lakhs. The expenses, okay, to earn 4 lakhs, I'm doing 2 lakhs expenditure, here 3 lakhs expenditure. Now, my question is, can I claim the exemption? No. Yes. So for computing the total income under the 5 heads of income, no deduction shall be allowed in such of the expenditure incurred by the assessee in relation to income which do not part form of total income. Okay. The exemption income they will be classified separately. So if to earn 4 lakhs, I have done 5 lakhs expenditure. 1 lakh cannot be allowed. Okay, even though it gets set off 4 minus 5, but 1 cannot be claimed under taxable income. Expenses under taxable income. The next, the manner of computing the disallowances where assessing officer is not satisfied with the correctness of the claim, the expenses attributed to exempt from income shall compute with the Rule 8D from the income tax rule. Expenditure related to exempt income that is amount expenses directly relating to the exempt income, then amount equal to 1% of annual average of the monthly average of the opening and closing balance of the investment, then income from which is exempt. So you will receive the total amount to be disallowed. 10AA for SEZ. For SEZ, as per the provisions, your first 5 years, 5 assessment year, there should be an 100% export, then it is exempt. The next 5 years, 50% of export profit, 100% of export profit, then 50% of export profit is exempt. Then amount credited to SEZ in reinvestment reserves or 50% of profit, whichever is lower. So to calculate the profit, export profit, so my total income, total profit of unit located in SEZ and export turnover, the turnover of SEZ, then divided by total turnover of SEZ. So you'll get your export profit. Export profit. Okay. Then the amount credited to SEZ reinvestment allowance reserves should be utilized for acquiring new plant and machinery or put to use within 3 years and put to use in within 3 years. Okay. Whatever. So after my about 15 years, you need to utilize the reserves which is in SEZ reserve account. So reinvesting for acquiring new plant and machinery, construction, new company, new plant. Basically, it's for new plant and machinery. If amount is misutilized, then the deduction claimed earlier shall be taxable. Okay. And it will be deemed income. If the amount is not utilized within 3 months, 3 years, it will be deemed income. Clear? Why no? Yes, yes. SEZ. Mm, yes. So now you should tell me in salary, which all the income is taxable? Salary, basic salary, and any other income which is taxable? No answer. Taxable. Gratuity amounts, yes. Basic DA allowances, leave salary, yes. Allowances, perquisites, yes. Yes, yes. Commission. What about bonus? Yes, bonus is done. Okay. Bonus is taxable. So my salary is advance salary. If I've taken a loan, I mean advance salary. Advance salary is taxable on receipt basis. Advance salary in advance. So I don't work for, sorry, don't pay me for next 6 months. You pay now. 6 months salary advance. Yes, it is taxable on payment basis. It will be taxable on payment basis. So what about salary in lieu during notice period? Salary received during notice period. No, no, no. It is not taken as loan. If loan interest part will be there, right? I'm saying pay in advance 6 months salary. Don't pay for next 6 months. Yes. So first to receive a salary, there should be an employer and employee relationship existing. Okay. Then the salary on receipt basis, advance salary, bonus, salary new, that is during notice period, arrears of salary. Calculation basic TA and perquisites. Okay. The fully taxable is basic, bonus, fees, arrears, leave cash, commission, uncommuted pension, HRA. HRA, how do you calculate? Accommodation is, if exemption is not allowed, if accommodation is owned by him or if he has not paid the rent for accommodation. So the next, if any assessee is showing adverse, like submitting someone else PAN in their company, okay, before issue of Form 16, then the person whose PAN they have submitted, he may accept or okay reject the income. Even that option will be coming soon. Okay, because here the limit is actual amount, whatever you have paid, rent paid minus 10% of salary. And next is 50% of salary in respect of relevant uh, for the relevant period. In case of Mumbai, Calcutta, Delhi, Chennai. If in Bangalore, 40%. Yeah, subject to three conditions. So you tell me now my actual rent. My actual rent is 20,000. Actual rent is 20,000. My salary, okay, including all my basic DA and basic DA and commission is say 80,000. Okay. So my first actual rent what I have paid into 12. 2 lakh 40. I have paid 2 lakhs 40. Then rent minus 10% of salary. My rent is 2 lakh 40. Yes, into 10%. 80,000 into 10, sorry, into 12 into 10%. So 96,000, right? Then 40% of salary that is 80,000 into 12 into 40%. So whichever is lower, which option shall I take? Is 96,000, whichever is lower. So your sir is saying one more is receives HRA 50,000 and HRA recovery is 15. No. What's her salary first? Residential school teacher receives HRA 50,000 and HRA recovery is 50,000. Then when it is in case of, you say if it is just a case of 12,000, case of 12,000, if the rent is 12,000, 12,000 into 12, 48,000, 40,000. 12,000 into 12. If she's paying less than the specific amount, in such case, it may get. No, HRA won't be allowed. The next, my standard deduction is 50,000. Right, sir? Whichever is lower, sir, it is first my salary, whatever the salary received. See, if my salary is 80,000 rupees per month, I'm paying actual rent paid, okay? With all legal documents I have produced to the HR 12,000 per month in such case. My actual rent is 1 lakh. So it is 12,000 into 12 months. It is 1 lakh 44. Then next, my second condition is rent minus 10% of salary. So rent is 1 lakh 44,000 and my salary is 80,000 into for 12 months into 10%, that amounts to 96,000. So rent minus 10% of salary, 46,000. Then 40%. If I'm staying in other than Delhi, Kolkata, Chennai, Bombay, then my 40% of salary condition. In this, whichever is lower. Whichever is lower in these three amounts, whichever is lower, I'll be considering. So in this case, my HRA is 48,000. Actual rent paid, actual rent. I showed for this is for monthly, and this is for yearly. It's an example yearly. Okay. Yes. My other standard deduction is under section 16. What's my standard deduction? Is 50,000 or what the standard deduction provide given by the employer, okay, for salary or pension, okay, whichever is lower under section 16(1). If it is 16(2), entertainment allowances for non-government employees, it is not available. If a government employee Okay. Then the lower of actual, whether he is receiving actual or 20% of basic salary of 5,000. Or this is as entertainment allowances. Okay. Actual or the 20% of basic salary of 5,000, whichever is lower. So now your everything you guys know. So the question is next. What about the gratuity fund? Gratuity, is it taxable? Section 1010. Gratuity. We have discussed in law also. Gratuity fund up to what is the rate? Up to what's the amount? Yes, it's exempt. Government employees complete exempt. Yes. If non-government employees, what's the amount? Gratuity is 20 lakhs. Yes. Please keep in mind gratuity. People come with gratuity funds also. Then pension, pension, received after his retirement taxable. Yes. Okay. Then one question: if an employee is served in any military force, then after his retirement from military, he is serving in some bank. Okay, as guard. In that case, is his income is taxable? Not taxable. How? How, sir? Non taxable. And then monthly pension is receiving. Clubbing with salary. Yes. Huh? Yeah. So, do we have any retrenchment compensation to employees? Compensation, retrenchment. Yes. Is it exempt? Fully exempt. How? When? When it has become exempt? It is taxable. So, it is taxable. So, actual amount received. Okay. Then next, so the deduction is actual received or amount calculated as per industrial Dispute Act or 5 lakhs, whichever is lower. If you receive the retrenchment amount within, if it is within 5 lakhs, then it is exempt. Okay, so as per the amount is calculated as per like that is same as your bonus. Okay, 15 by 26, your last 3 months salary into year of completion. 15 by 26 into 3 months salary into year of completion amount. Okay, it will be lesser to avail the exemption, then balance will be taxable under salary. Is it clear? So cash award. First, my question is it recognition, right? It is recognition and for your achievements received from the recognized organizations, government will be exempt. Then next, what about my um, what about my retirement benefit? Retirement, retirement. Answer exempt. See, gratuity, no. Even during the period of 5 years, after completion of 5 years, when I'm leaving the organization, I can claim gratuity, right? So gratuity not. Gratuity not. Please tell me about retirement benefits. So here up to 5 lakhs. Up to 5 lakhs, you can claim the benefit, actual amount received or lower of actual amount received, amount calculated as per Industrial Act, the next maximum 5 lakhs. Sorry, here actual amount and up to 5 lakhs is exempt. Voluntary retirement, there is a cap of 5 lakhs. So when there is a voluntary retirement, actual amount is received. If it is less than 5 lakhs, then whatever amount is received is exempt. Else, actual amount or up to 5 lakhs. Then calculate as per the act. Voluntary retirement is only of 2 lakh 50. Then first will be what is the salary, last drawn salary? Last drawn salary. Sir is asking for okay. Say voluntary retirement amount is say 2 lakh 50, right? My last salary. Okay. My last drawn salary is um say 50, 30,000. Last drawn salary is 30,000. Then next is year year of completion. So 20 years. 20 years. 20 years. Actual received is 2 lakh 50. Clear? Then maximum is 5 lakhs. As per the act, I need to calculate, right? As per the act, my last drawn salary and balance. Either you can go with balance of number of months left for the service, okay, or last drawn salary, where it is. I'll calculate 30,000 into 3 for 3 months, last 3 months, or number of years of completion is 20 years. Okay, so this is my last drawn salary. In this, the next one is my last drawn salary is 30,000. Say I had still 2 years. So 2 years left. So 2 years means amounts to for 24 months. Balance month left. Whichever is higher. In this, I'll be taking the amount of 7 lakhs 20, right? Whereas in the first case, last drawn salary into 3 and into 20. Clear with number of completion of years. Then next, balance month left. In balance month, last drawn salary into number of months left. Okay, so that's an voluntary. So in this higher, it is 18 lakhs. So lower of maximum. So lower, which one I can take? So lower is 2 lakh 50, completely exempt. Completely exempt. Suppose if I take my voluntary retirement was 8 lakhs. When I retired, it was 8 lakhs, same 30,000 salary. Okay. 8 lakhs is actual and 8 lakhs or 5 lakhs or calculation. Same, right? 30,000. I have not changed the salary. In this case, I'll be taking 5 lakhs. Maximum exemption is 5 lakhs and balance taxable is 3 lakhs. Clear? Yeah, basic DA and commission. Yes, 5 lakhs. 5 lakhs is exempt, but lower of these three amounts. If my when my voluntary retirement amount was less than 5 lakhs, it was 2 lakhs 50. Lower of three, right? In that case, it was 8 lakhs. Right? In that case, it was 2 lakhs 50. Second case where my voluntary retirement amount is 8 lakhs. Such case, I'll get lower of this three is 5 lakhs. So 5 lakhs. Max to max 5 lakhs you will receive. Whatsoever your first and second calculation, even though it is higher, until it is lower, you will get lower of the sides exempt. If it is higher than 5 lakhs, you will get maximum 5 lakhs. Voluntary retirement. Next, we are jumping to house property. Okay. Um, so what is deemed ownership? Deemed ownership. Deemed ownership, sir. Property is in name. More than one house. No, it's in my name only. Suppose owner is the minor. Yes. Deemed owner will be guardian, right? Father or mother. No, no, no. Legal hair. Okay. We'll come back to that. So basis of charging section 22, my first condition is I should have an house and I should be an owner. Such house property is not be used for the own business or purpose. In such case, it is the any income derived is not under housing income from house property. Okay. The next concept is ownership includes benefit of ownership and deemed ownership. Well, I am the owner. Have I have let out the property to Mr. B. Okay, there was an 2 BHK house. 2 BHK house. Okay. He he sublet. Okay, since it was a very big house, he sublet to one more, Mr. C. He told you come and share with me. And he is receiving the amount where I'm charging 15,000. He is charging 8,000 from him, including all expenses. Such case, the 8,000 will be received by the tenant. Okay, not the owner, sublet. They both agreed together and they're what he is receiving the amount. Okay. The next, the income received from C will be classified as income from other source. One case. Okay. Then the real owner is receiving the house. In such case, sorry, who's receiving the rent, it is under housing income from house property. Okay. Or one more case where he has taken the house at rental basis of say 50,000. 50,000. He's not using the house. Okay. So he's subletting. Okay, he's subletting to the people. And under that case also the rent is known as income from other source to the tenant. Clear with this? So I've sublet to 55,000. See, advance is returnable. Advance. The amount whatever the paid in advance is returnable. In such case it is not taxable. Yeah, sublet is against law, but we do, right? 55,000, whole 55,000 will be taxable. The next, if agreement is silent with regard to sublet, okay, deemed owner, okay, okay, where assessee has transferred the house to his wife. In that case, so in order to avoid tax, they want to evade the tax. But this lady was not is not working. Either she don't have any other income, or she has not received from, or it's not an ancestral property. Okay. So he has sold his property without consideration or at lesser price, inadequate consideration. So in such case, income derived from the house, okay, is taxable in the hands of assessee, not the legal owner, except where they plan to live apart. It is to evade the tax. Evade. I should prove, right? On what basis? On the grounds. See, if I myself an earning person, and I also invested, I have an inflow of cash. Yeah, to save the tax. See, from the point of assessee is to save the tax. From the point of assessing officer, it is to evade the tax. Without consideration, I have given. She will be a legal owner, but the income will be assessed in the in the head of her assessee, deemed owner. Yes. The next, minor. Similar way, minor with or without consideration or in inadequate consideration, transferor will be the real owner. Minor child transferee is a legal owner. Exception is minor married daughter. That's it. And statement, how do we calculate the rent? Is first your municipal value or fair rent. The municipal value means the current area price of that house per month rent, whichever is higher, then that with that amount, the standard rent, okay, we calculate with the standard rate, whichever is lower, expected rent to be received for that particular house. Okay, that you will get. That is from the standard rent or whatever the fair rent. Expected rent to be received, actual rent received, whichever is higher. So on gross annual value, I will be reducing municipal tax. Then I'll have a deduction under section 24A and B. Then standard deduction of 30% after 24A standard deduction of NAV, then interest borrowed funds. Clear? So, if it is self-occupied, maximum 2 lakhs, right? Here, no limit. Can you tell me how the 24A operates? 24A. Interest cost, pre-construction cost. Allowed, yes. It is allowed over a period of 5 years. Yes, done. So balance will be continuing in evening session.
Yes, anything? So the balance session will be taken up in the evening. So to this extent, compliance part of direct taxes, especially income tax. Okay. 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 Anybody want to talk? Can raise your hands. Yesterday class PDF has been already placed in the link, sir. Drive link already given to you, in the same link. You can take all the copies. That all the material will be kept there. You can download it. The same link what actually the 2 classes you have downloaded. The FTP and the CTA both has been kept there. Walrajji.
Good morning, sir.
Good morning, yes.
Sir, interest paid by both the spouse, husband and wife. How can claim, sir? House property interest paid by the husband and wife.
How the EM is actually now paid, whether the EMI is paid or the money is directly paid to the repayments.
From the joint account, sir.
Joint account it is debited. Whether the property is jointly registered?
Yes, sir.
If the property is jointly registered, you have 50% share.
Okay, sir.
So both has to claim 50-50 from your this one. Right, madam?
Yes, sir.
How the property is, accordingly the share will also go. If the property is jointly registered, it is a joint property, 50% share will be yours, 50% share will be theirs. You can take the certificate from the banker or the financier accordingly, and you can claim to that extent.
Sir, in some other cases, one of the spouse is government employee. Another one, say husband in the housing loan is in the name of husband.
Okay.
So the overflow of interest payments and principal repayments, ATC exemption limit is exhausted.
No. Let me clear first.
Sir.
The property is registered
in husband name, sir.
Only in the husband's name, huh?
Only in the husband name.
Okay.
Housing loan is in husband name only.
Okay.
Whether the interest and principal portion can be apportioned to spouse.
No. Only the owners, those who are actually, of course, you have taken the loan in the name of the beneficiary first. The owner
Okay.
only can have the loan facility and other things, no?
Okay, sir.
So accordingly, how you will transfer the benefits? How that overflow and all other, if the limit is limit, individual limit is individual limit.
Okay, sir.
It
But
is jointly registered, then only it can be bifurcated and accordingly you can, it is to be planned earlier. It would have been planned. Now if you try to take that one, the law does not permit. Madam,
Yes, sir.
am I right?
Yes, sir.
What Palraj sir is telling, the property is registered in the name of husband, okay, and also the loan is taken in the name of husband, and wife want to claim the excess amount of what actually the interest and other things, what they are not getting the benefits in that repayment and
No,
what you
can't
call it
claim.
as under 24.
No, sir, we can't claim.
How can be? There must be, of course, both you are relatives, but the documents should be joint, otherwise it cannot be. Okay, sir?
sir, one more, sir.
Ah,
Last question.
ah,
See, for income benefits,
ah.
for CIBIL and income eligibility criteria, the
Which
banker
one?
might have
Which one?
income in other cases, sir.
Ah,
Property is in the name of husband
ah,
and wife is also a government employee.
okay.
For income slab for EMI calculations and loan eligibility, they've taken as a wife as a co-applicant.
Okay.
In that case, can I take, sir?
Sir, co-applicant is quite different because it's only an obligation, whether the
Okay.
property is jointly registered or not.
No, sir. Title deeds is in husband name only.
Okay, the co-applicant, she is only a co-applicant.
Okay, sir.
No, let me clear.
Yes,
Madam,
sir.
are you getting the point?
Yes. So, co-applicant will not be the joint owner, no, sir.
Ah,
Joint
that's
owner
what
of the
actually
property.
we have to be very careful.
Yes, sir. Yes, sir.
Applicant is only an applicant because she has a guaranteed source of income and to ease of repayment, all other things, that facility has been made.
Okay, sir.
How the ownership is going to be affected there? It's only just co-applicant is just to say like a guarantor.
Okay, sir. Very clear, sir. Thank you, sir.
Lokesh? How many times can claim interest amount exemption if first housing loan is cleared per head? Only one time, sir?
Sir.
Only one. Yes, sir. Lokesh ji.
Sir, good morning, sir. Sir, my question is, our assessee is dead, sir. Notice given to our family, sir.
Okay.
Next, what is the procedure, sir?
The procedure means whether they are the legal heirs,
Yes, sir. Yes, sir.
whether
Husband is
any
there, sir.
properties, liabilities, all are actually the liability of the the property ownership and everything will be enjoyed by the legal heirs only.
Yes, sir. Yes, sir.
Whether yes, what is the
sir,
notice?
Sir, notice for investment purpose, she is purchased one property for near about 6 crores, sir.
Okay.
With some partners also together. Total 6 crores is there, sir.
Okay.
6 member purchases, sir.
Okay.
Sub-register uploaded individual wise, same amount individual wise is uploaded. In 26 years showing that, sir, that amount.
No. Let me clear. There are 6 owners, no?
Yes, sir.
6 owners and that 6 crore property is registered jointly.
Yes, sir. With loan also is there, sir.
Okay.
Near 5 crores is there, sir.
All the 6 persons are having the PAN number.
Yes, sir.
Whether the registrar has uploaded only in the single name or in has divided the portion into all or shown the same amount in all the PAN.
Sir, some partners, sir, like 2-3 partners is 26 showing, sir, but other person not showing that amount, sir. Only 3 to
Okay. What actually the amount is showing to your client PAN?
6 crores, sir.
6 crores directly.
Yes, sir. Yes, sir.
Okay. Then do you have the copy of that property registered with the sub-registrar?
Yes, sir.
Okay. Then you have to reply accordingly, no?
Okay,
What
sir.
is your,
But,
no, they have given the notice on what grounds? Whether they are asking the sources or whether they are asking about whether the income is to be declared or what? Why the notice has come first?
sir, first, she is not filed the return, sir, during the
Okay, she has not filed the return. Okay, okay, agreed. Next.
Since 4 years, sir.
Okay, no
She is
problem.
she is death also 4 years back, sir.
Okay, no problem. Then whether
Same period, sir. But
whether the property is still in the name of the deceased person or the property is transferred to the next legal heirs.
sir, property is sold it, sir, already. With the bank loan is there, the settlement is that property, sir. With property is now it is clear, sir. Property is no more, sir.
Okay, okay. The loan was there and accordingly it was sold. Who sold the property? Whether all the 6 persons together
Yes,
have
sir.
sold the property?
Remaining owners sold it, sir.
What about the deceased person? You are telling your client. What happened to your client? Whether she got the money, whether the...
Sir, one of the husband is there, sir. He is also taken all responsibilities and sold that property, sir, with bank loan. Everything is clear, sir.
Then you have to recompute what the amount loan you have taken together.
Yes, sir.
What the amount interest you all paid together. What is the cost of the acquisition of the property together. What is the total money totally to be divided together. All this, it all requires, okay, you can contact me or madam. We will help you.
Sir, one minute, sir. 1 minute. How to replace, sir? Portal.
Reply first. You have to take exhaustive details and then you have to reply. If you blindly
in
reply,
portal
you may also get confused and they may push you to some demands and other you have to unnecessarily.
Okay, sir. Okay. Sir, now I am reply to in portal deceased person or authorized person, sir.
First, you do one thing. The existing PAN number, you have to legal heir, you have to change. You have to transfer in the name of the existing legal heir. There is a procedure in the portal itself. You take the death certificate, you take the survivor's PAN number, you transfer that in the name of the legal heir. So then only you will get an authorized signatory for that PAN. Then you can file the return or reply anything.
In authorized persons.
There is
in legal heir account, sir.
Legal heir.
Only.
Legal heir, in the name of legal heir, that PAN will be there. PAN cannot be changed. So the PAN can be verified and signed by the legal heir that you will get from the portal. You have to go to the login and you have to apply as the why you want to change. So deceased person, the death certificate and the survivor's PAN number, both has to be uploaded. Then automatically you will get the power to reply and all other things.
Okay, sir. Thank you, sir.
Okay.
Right, sir. Right.
Okay.
I will do, sir. I will do,
Okay. Shankar Reddy. Unmute. Unmute.
Good morning, sir.
Yes, please.
Sir, one of my client is to 2018-19 not filed that time.
Return?
Yes, sir, IT return. That
Okay.
is the house rental income is there, capital gain is there. It's the
Okay.
same deed. And property purchase also is there.
Okay.
And the one vehicle also is purchased.
Okay.
But have to return filed the December, last 23 December only. That already is the 247, everything it will be, intimation is received.
No, I am not getting. 2018-19. They
Yeah,
have
return
all
not
this.
filed that time, sir.
Okay, now whether you have filed the belated return now,
Yeah, belated return 148 section already filed.
ITR you have filed or you have replied to the notice.
Replied to notice and have to
Okay.
file the original return
You
148.
have filed already under 148.
Yes, sir.
Okay, then what happened?
Again, already I have inspection that Kormangla, that assessing officer, they accepted. But again, the demand appeal, it will come, sir. 2 crore it will. Yes, sir.
Again, the demand is coming in the portal.
Yes, sir. Yesterday
Then
only.
so you have to compute and accordingly you have to reply there
But-
only. You have to apply for
Yes.
154 now.
154 already is closed, sir. It will come right now, appeal directly.
No. How appeal will come? If there is a computation, if there
Yes,
is a
sir.
dispute in the computation, if there is a apparent mistakes on the record,
Yeah.
first the mistakes apparent on the records is to be cured.
Yes, they have sent that email that calculated that original shell deed amount is there, no? That only calculated amount.
Then it requires some consultancy. You can
Yes.
call madam or me or anyone. Okay.
Yes.
Because straight away how I have to reply, because
Yes.
we have to take what is the property, what is the vehicle, what is the loan amount, what is the capital gains, what is the interest, all it is to be computed in accordance to the procedure. And then what happened is to be analyzed. And in accordance to that only the reply is to be prepared. Whatever you do, the reply is only the reply. Wherever you go, the clarification, justification will only survive, no?
Yes, sir.
Okay. You can contact madam and you can consult there also, or you can send me details on my WhatsApp or any other thing. We
Sure,
can
sir.
read it, not an issue.
Thank you, sir. Thank you.
Okay, don't
Thank
worry. You can always. Property in the name of wife and housing loan taken by husband. How can claim? No, that's no. Yes, you are right, sir. Miskin sir is right. How many times? Okay, cleared only eligibility of loan. What is notional rent? Notional rent means a rent what actually you are not earning. So it is deemed to have been earned. For example, there is a valuation rule. In your area, the rent is 1,000 rupees. So the notional value is to be declared. That is called, best to say is the assessable value as per municipal records. As per municipal records, what would be the rate of rent? According to that, that is to be declared. Assessable value of rent. Last day PPTs you will get, sir. Okay. Additional deduction under 80 EEA. Okay. How much limit? Gift tax. Madam,
Yes, sir.
Srinivasan has asked one question.
Okay.
How much limit is for gift tax? Is there any limit for gift tax? Government are giving some cash awards. As far as my little knowledge is concerned, now there is no gift act. Gift act is no more exist. All the gifts are taxable, okay, over a limit, and the gifts which you receive from cash awards and all other government, they are all exempted. Okay, any gifts given to other than the relatives, okay, is taxable, and even a gift is given in any occasions are also exempt. Right, madam?
Yes, sir.
In any occasion, marriages or some functions, there must be a special occasion. But in that time, if you gift it, though the monies are exempted. Other than anything which is doubtful are always totally brought to the income head only. Now that 13/9/2004, if I believe, if my memory is correct, 13th September 2004 is the date what actually the gift tax is no more. PPT. Madam has already shared session 1 that you can download from the chat box. Okay. In the proceedings, we have to submit section 143(1)(a). What's that? How is tax calculated for the return on foreign shares? Madam Attadkar is asking how tax is calculated for the return on foreign shares.
Foreign shares, is it long term or short term, sir?
Yes, not clear, but just they have mentioned foreign shares. If it is short term, what will happen, madam?
Sir, a board on that direct tax, 15%
Okay.
tax,
If it is held for the long term,
20%, sir.
20. 20% in accordance to that benefit of that capital gains. Attadkar.
Namaste, sir.
Namaste. Yes. Is it clear?
Yes, sir. My client has purchased the company shares in which he was working. Now he has resigned from that company and need to sell out the shares. It's been 6 to 7 years he was investing.
Okay.
How to calculate, sir?
Then it comes under capital gains only, no, madam?
Capital gain.
Capital gains long term.
Long term. Okay, okay, sir.
Mohammad Ali ji. Yes. Rectification of mistake under section 54 to be applied. Yes, right. Any mistakes for 154 is always open. That because you have to, even in some intimations, you get the information through the portal, then you go there and respond, not agree. It will ask a reason others, where also you can reply your justifications and other things. Is house property in the name of spouse and husband is paying loan, then he can claim housing loan. It is to be bifurcated in accordance to the percentage of share held. Gift from others is exempted, rupees 50,000. Yes, only up to
Yes.
50,000. Anything over and above. Blood relations. Blood relation, yes, blood relation is most important. Relatives have been defined under section 2, subsection 24. You can verify who is a relative, descendant, ascendant. Relatives have been also mentioned there. Whether shares can be gifted to company by a director of company. Definitely gift can be given, but the transfer procedure in accordance to that has to be done. Okay, please explain deduction limit. Madam,
Yes, sir.
one Vinay Bhavi has asked, they want the deduction limit under NPS for 80 CCD 1 and 80 CCD 2. 80 CCD 1. Totally, when the employer pays and employee both pays, new pension scheme.
Sir, it is up to 50,000, sir. 80 CCD. The maximum deduction is 1,50,000 under section 80C and balance 50,000 in 80 CCD 1B. No, sir.
They asked what is 80 CCD 1 and 80 CCD 2. 80 CCD 1 comes for employer's contribution.
Employer's contribution.
80 CCD 2 comes for employee's contribution.
Employees.
Long term, yes. WhatsApp group. Yes, the link will also be shared in the WhatsApp group. You can download those documents. Okay. Yes, employer share is added as a perquisite. It is to be clubbed first. Employer share must be taken as an income. Then only you have to claim both there, your share and other shares. Because once it is an income, accordingly the deduction will have no effect on the total earnings. Otherwise, if the deduction is given without considering the income, it becomes irrelevant. Double deduction. For share trading F and O, is it taxable in normal calculation or it is presumptive? Sir, madam, whether the share trading qualifies under presumptive or not, the question is asked here.
Under presumptive cases, we can't take, no, sir.
100%.
It should be classified. No,
Yes.
no, you can't take, sir.
Because you have to allocate share trading also subject to the holding of shares for 1 year and more than 1 year. Short-term capital gains and long-term capital gains will also happen, no, madam, in that one.
Yes, sir. Futures and options are mainly like for intraday or within like within 2 or within 1 week it will get closed.
Okay.
So in such it will be like what presumed to be as a business and should be taxable as a normal business.
In the new slab, can I claim income tax exemption on judicial allowances like hill area allowance, leave travel collection, concession and medical allowance? I think in the new slab only 2 deductions have been given. Correct, no, right, madam? One is standard deduction. Madam?
Yes, sir.
In the new slab, only 2 deductions are allowed, if I am right.
Yes.
One is standard deduction. Hello?
Yes, sir. One is standard deduction. Another one is your rent. That's it, sir.
Rent
That's
under
all.
24.
Yes, 24B. Yes. And one more is employer contribution to NPS, new pension scheme.
Yes. Only that section 1013A is allowed there, madam?
No, sir.
1013A is not allowed. Only the 24 is allowed. Okay, okay. Because if we say rent, they will think about HRA.
No,
HRA is not the part.
Interest.
Yes.
I showed red where we are,
New
where
regime.
HR is. Yeah, in new regime it is not allowed.
In new regime, interest on 24, let out property is allowed, but self-occupied is not allowed. Okay.
So green marked is allowed in new regime.
Yes. Right. NPS employer contribution under new regime, we have to mention same amount in salary income. Is it right? Yes.
Yes, sir.
What about 1014 in new regime? Okay, 1014. Intraday. Okay, business income. Yes, in regime risk allowance is allowed. Risk allowance is not allowed or no, sir? Risk allowance. I think risk allowance is not allowed, no, madam?
No, sir.
Any allowance received is spent, cannot be treated as a income first. Any allowance earned but spent. Okay, if it is given as an allowance, whether you are spending it or not, then only it has to be treated as an income. In new regime, housing loan deduction, all that is a housing loan. Madam, whether housing loan is allowable for deduction under new scheme?
No, sir. Only when
Nothing.
only it is let out property.
Yes, only if you are showing any income or loss, that is to be treated in the separate head. Okay. NPS contribution employer should be first added to income, then only allowed. Yes, right. It is to be added, then it is to be allowed. Right procedure. For claiming HRA from salary, is any documentary proof required, such as letter from owner? 100%. Because if you are claiming under section 1013A, provisionally your employer might have allowed you, But while claiming, nowadays many notices are coming. So in future, yesterday I was attending one income tax program where the officer is telling they have around 5 crore informations. Okay. And all that from 2001 and 2, now it is going to be asked for. That they are mentioning that one hub they have maintained. In that more than 5 crore information is there with them. So many notices will come if you don't file the return and accordingly. So they are telling. So you must, for not only for rent, even for claiming the deduction from LIC or any other insurance, 80G, okay, 80GG, okay, all these things, everything, a proof must be there. Provisionally, your employer might have allowed whatever the allowance as per section 1013A. Okay, you have to keep the proof, because to compute, when you are earning a house rent allowance, if it is more than the rent paid, then only that amount will be qualified as a deduction. Okay. So all those proofs are mandatory, sir. Okay. Madam, contribution to Agniveer is allowed?
Yes, sir, allowed, sir.
Rupees 1 crore owner PAN must. Okay. Agniveer.
5, 6.
Contribution
For
to
6 funds. Yeah,
80
6 are allowed.
80 CCH.
Yes, sir.
Yes, sir. Yes. Yes. Okay. How many years? How many years maintain the records? Records are usually to be maintained for 4 years if there is no dispute. If there are disputes, till the closure of such disputes, the records must be maintained. Is it
Check.
compulsory donation through 80G? You check. Yes.
More
Not
than 5,000.
more than 2,000, no, madam?
2,000, 2,000, sir. 2,000 and above, sir. Yes.
2,000 and above, checks or online payments are must. Okay, introductory. Intraday transaction, 1 crore, or it is required. Yes, sir. If it is more than 1 crore, it qualifies as a business income. And accordingly, once it is a business, it falls under section 44AB. Accordingly, you can. Okay. Okay, we will take one interaction session only we will take, because we might have missed many questions here. How many years we have to maintain books or accounts or documents? Sir, books of accounts are mandatory and it is to be maintained and it is to be retained till 4 years under Income Tax Act if there are no disputes. Okay. You have a question, you can ask, sir.
Good morning, sir.
Yes.
Sir, this is
Just
Mohammed.
a minute, in between, I will tell one interesting question here. HRA and housing loan both can claim? No, sir. When you are claiming HRA, because the HRA is allowed, because you are paying a house rent. Okay. If you are staying in a different station, okay, then only you can claim. If you are staying in the same station, how you can claim HRA? HRA is allowed only to those people who don't have a house. Okay. So housing loan and HRA, that must be examined properly. Okay. Yes, sir.
Good morning, sir.
Yes, please.
Sir, one of my clients is given amount.
Sir, your voice is not clear.
One of my clients has given amount.
Sir, your voice is not clear.
Now is audible.
Very low
Hello.
speech is there.
Hello, sir. Now is audible.
Yes, you can.
Hello, sir.
Better you
Hello.
text in the box, sir.
Sir, is audible now.
Yes, you can please. First.
Sir, so one of my client has given some amount to his parents and his spouse.
Okay.
So is there directly have transferred the amount to their bank accounts, sir?
Okay.
So is it going to be problem for their parents and his wife, sir? Because they
Sir.
have given.
Sir, one thing is very clear. Why the money is given? Whether the money is given as a just a trust.
No,
Because
sir, for parents, sir, for parents he has given and his for his spouse.
why
And they are
whether
getting
it is
interest.
whether it is deducted as an expenditure from him, or whether it is to be treated as a income from their end.
No, the for principle of
Family
for
arrangement.
starting of it.
Whether
Yes,
it
yes,
is
sir,
a family arrangement.
yes, sir. For starting his business, they have given some amount to him,
Okay.
and spouse also given amount.
Okay.
So that's why he have given that amount to the when he is starting the business.
The man who received that money has to treat it as a family equity, because it is not his capital. It is a capital of his family. Family equity. There is one more column that he has to mention as, because it is
So
not his capital, nor it is a loan.
because it's around 75 lakh rupees, it comes.
Whatever
So
it may be, sir. If the money received is already taxed, okay, it can be given to anybody. Okay.
within the family.
Within the family. Then it
So
is treated.
they are
It has,
getting interest, sir. They are getting interest. They have to
if
file
they are getting
interest.
the interest, then it becomes a loan. Family, it is a loan from family members.
No, sir, they are kept in the SB accounts, and they are getting that interest for personal accounts only, for their SB account only. So they
Now
have
I am totally confused. You are telling they have paid money to start his business,
start his business. Okay, yes.
and you are telling they are getting SB interest. From where they will get the SB interest?
So he have transferred that amount to 25 lakhs. He have transferred directly to their account, sir.
Who has transferred to whom, sir?
Client has transferred to their parents' account and his spouse account, sir. 3 members. For 3 members, he have transferred 25 lakhs.
Whether he is a business person first as a salaried person.
100%, sir. He is having a business.
He is a business person. He has 75 lakhs in his SB account.
Not in his current account. He has
transferred 25 to spouse and parents.
Yes, sir.
Then they are getting SB interest out of the 25 lakhs.
Yes. For 25 lakhs, they are getting a SB interest.
Now you tell me whether the man who has paid that 75 lakhs to his family members,
okay,
what he has written in his books.
So that's what I'm asking to, sir. How to go?
No. We will not guide you what you have to do. We will guide you whether what you have done is right or wrong.
Last year, the financial 23-24, you have transferred. So future we have to plan, sir, according to that.
Whether that business person having any loans.
So right now he have taken, sir, loans, OD account.
So be careful. If you have any loans and you have any surplus funds with you, and you have transferred it to others as a loan, the interest paid on your overdraft and any other loans will be disallowed from the computation. Unnecessarily, you should not invite any troubles. Okay. You can come to me, I will guide you. You are from Bellary, no?
Yes, sir. Yes.
Oh, you come to the Bellary study circle exhaustively. I will tell you. Saturday there is a class, 2 hours class.
Okay.
We will discuss in detail. So these are all interesting points we have to discuss. Then only we can strengthen our
yes, sir.
knowledge and practice, and the clients who take service from us will be helpful. Definitely.
Yes,
okay.
Thank you, sir.
Thank you. Yesterday, yes, that will be shared. Okay. Trading business turnover 50 lakh. IT filed 44 AD. Books of account maintained. Must or not. Trading business turnover below 50 lakhs. IT should be filed as books of accounts only. Because 44 AD, if you declare, there is no need of books of accounts. But once you are trading and your turnover is 50 lakhs, kindly check whether you are registered under GST or not. the books of accounts as per GST law is mandatory. In accordance to that act, if you maintain the purchases and sales, that is enough for income tax also. Because to compute the turnover under 44 AAD, there must be a base. How you have to imagine only 50 lakhs? There must be some evidence. So that evidence is your sale register and purchase register. Accordingly, that records must be there. Books of accounts means you have to think only in that manner, not in accordance to that 44 AA and 44 AB. That type of books of accounts for audit purpose is not required. That is the only meaning what the Income Tax Act says. For your kind information, you may be astonished. There is no words in the whole of the Income Tax Act what kinds of books of accounts you have to maintain. It says books of accounts maintained under any other law. So be careful. There is only mention of section 44 AA, and now under rule 17 AA, the trusts have been mentioned what kind of record they have to maintain. Okay, otherwise other law will come into support. Right, madam?
Yes, sir.
In the whole of the Income Tax Act, they have not mentioned what kind of vouchers and other things has to be maintained. So any GST dealer, you have to depend on rule 56 of GST rules. Exhaustively it has been described what kind of books for what kind of nature of activity you have to maintain. So accordingly you have to make. Okay, we will take it up. It is already 8:10. Let us not hamper anybody. Okay, madam. Thank
Yes.
you. Thanks a lot, madam.
Thank you,
See
sir.
you all.
Thank you, sir. Good evening to all. Shall we start the class, sir?
Yes, definitely, madam. You can start.
So next topic we are going to learn about business profession. So in business profession, only the business income or any other types of income also is included as business income, except sale and trade. What are the other types of business income which is considered as business income? Please write in a chat box. Partnership share will be exempt, right? Partnership share. It's not a business income. So what about the sale of merchandise scripts? Is it a business income or what? What about the sale of scripts? Merchandise scripts. In foreign trade policy, we have learned, right? Regarding service and merchandise scripts. Selling off the credits if you are not availing the refund. In merchandise based scheme, will be selling the manufactured goods. Whereas in service oriented, we are exporting the services more than 3%. Right? Sorry, more than $15,000. Can that sale of scripts can be the business income? Yes. Yes. So my profit is increasing and the scripts I have received during the in the course of business. Okay. So in business, profession, my charging section is 28. Any profit or gain. I'm not saying business and profession. Any profit or gain derived from the business or profession carried on by the assessee at the time during the previous year. So business means includes trade, commerce, manufacture, or any adventure in relation to trade, commission, or manufacture. So here is a list of business list of incomes which are classified as business income. So a regular course of business. Okay, then profit on sale of import entitlement license, my credit scripts, cash compensation support or duty drawback. This is from my FTP. Profit on sale of DPB, that is duty entitlement passbook scheme, merchandise and service oriented scripts, duty free replenishment certificates, any amount received under keyman insurance policy, any gifts, benefits, perquisites arising due to business or profession, and any interest here under section 40A, so 40B, where it has disallowed any interest, salary, bonus, commission which has been paid to the partners. Okay, in such case, those incomes will be taxable in the hands of the firm 40A. So that incomes will be classified in business. Not that won't be taxed in the hands of the partners. Non-compete fees, not carrying out any activity in relation to any business or profession, or not sharing any know-how. Okay, for the certain period. So income derived from by trade, professional or similar association from specific service performance for its members. So this is like AOP, association of persons, or trust. Okay. Okay. The next, sale of inventory. In case of sale of inventory, which where they have converted from stock to into capital goods, or capital goods to stock, and any compensation or other payments due to received by or any person at or in connection with termination or modification of terms and conditions of any contracts relating to its business shall be exempt as a business income. Yeah, royalty and patent exchange difference. If it is for during the course of business, it is an income only. If you incur a loss or exchange fluctuations, will be either debit or credited to my P&L. So certain transactions, okay, not deemed to be speculative transaction, like hedging contracts in respect of raw materials and merchandise or stock and shares, hedging contract, okay, and forward contracts, trading in derivatives through recognized stock exchange, trading in commodity derivatives through recognized stock exchange, which is chargeable to commodities transaction tax. However, the requirement of chargeability of commodities transaction tax is not applicable in respect of trending in agriculture commodity derivative from assessment year 1920. Okay, and speculative business shall be treated as separate and distinct business. So maintenance of methods of accounting. So as per section 145, either we need to maintain on the cash basis or mercantile system. So my section 30 and 31 is similar. So unless your building is used for the pure business purpose, it is taxable. Sorry, the expenses for that building will be allowed as expenses. Whereas if the same building is used for personal use and you want to claim the expenses, it is disallowed. So what the effect we used to give in accounts, same effects. The next, if it is a repair where the efficiency of the system does not increase, such case you will be debiting to P&L. It is allowed as expenses. in income tax also, whereas capital expenditure, construction of another floor, so increasing my rental income. Okay, in such case you'll capitalize the goods, then no expenses can be claimed unless you can claim the depreciation. Okay, so building used for business or profession, deduction is allowed whatever the actual expenses has incurred. Used any other for personal use, not allowed. In case of repair, current repair, when the efficiency of the product goods does not increase, in such case it's classified as revenue expenditure and allowed as an expense in that year. Okay, whereas capital repair, no deduction but can claim the depreciation. Then repair and insurance, similar way, used for business purpose allowed, other than business purpose it is not allowed. Repair, current repair allowed if it's construction for increasing the efficiency of the product goods, such case it is not allowed, capitalized. Then any rent which you are receiving from plant and machinery means I have the machinery I had given on operating lease basis. Operating lease means I am receiving this certain sum of money, rent as in rent receives. In such case, my business is just renting of my plant and machineries. So in such case, the rent income is classified as an income. The expenses there too for the attached to the plant and machinery can claim the can be debited to my P&L and allowed as expenditure. And to claim depreciation, my conditions are asset must be used for the purpose of business and profession, and it should be owned by the assessee, and depreciation should be on block of assets. Now on individual assets we don't have the depreciation rate, and asset must be put to use. Put to use if it is put to use more than 180 days, it is 100% depreciation you can claim of the whatever the percentage notified. If it is less than 180 days, then 50% in that current year. Okay, no depreciation even if purchased or otherwise. So no depreciation on goodwill if purchased or otherwise. So the next additional depreciation you can claim only if you are manufacturing or power generating unit. The additional depreciation where the machinery has been put to use on or after from 1st April 2016. Then that is for first year, additional depreciation of 20%. If used in that particular year less than 180 days, then it will be claimed 50% in that year and 50% in subsequent year. And even the manufacturing unit is set up in notified backward areas. In such cases also additional depreciation can be claimed. Set up and forward of unabsorbed depreciation. So this year, in this current year, the business had incurred the loss. In such case, instead of depreciation being consumed in that year, whatever the balance can be carried forward without any definite time. Okay, it's indefinite. So you can carry even more than 10 years also depreciation. Okay, my criteria is on first calculate my total income from business and profession. Then if for that current year depreciation to be allowed, then next is brought forward depreciation should be deducted from the current profit of the business. Yeah. Whereas a business loss. So if I have even a business loss, year one I have depreciation and business loss. So year 2 I had a profit. Profit in such case, first my depreciation, current year depreciation will be reduced. Second, my previous year business loss, because the loss from business can be carried forward only for the 8 assessment years. Okay. Then my unabsorbed depreciation can be claimed. Okay. The unabsorbed depreciation can be carried forward and set off even if return of income is filed after due date. Okay, if you file the IT returns after due date, also you can claim the unabsorbed depreciation. Whereas business loss, in order to claim the business loss, the return should be filed before the on or before the due date, either July or September. Okay. In subsequent assessment year, unabsorbed depreciation can be set off against any income, whether chargeable under PGBP or any other head, except salary you can deduct from any other heads of income. In the matter of set off of the following priority, okay, as I told, first current year depreciation, then my business loss because I can claim up to 8 assessment year, then balance can be deducted from unabsorbed depreciation. The next point is the revaluation of assets does not have any impact on income tax. Okay, for the year of calculation of depreciation, revaluation shall be ignored. Clear up to depreciation. See, in your P&L already you have created loss. There is no mandatory to create a provision of depreciation. Only your loss of that particular year will be bifurcated as your unabsorbed depreciation and loss. Loss and depreciation you will be somehow reducing from your reserves, right? Yeah, it will be in my income tax return. So the depreciation is getting carried forward from 3 years, 4 years. There is no time limit. So certain expenses where you can claim 100% depreciation when you are making any contribution to National Fund for Rural Development, then National Urban Poverty Eradication Fund. The assessee shall be allowed a deduction of the amount of such expenditure incurred during the previous year, 100%. Similarly, if expenditure for research, scientific research, if you own in-house research is taken place, in-house research, then revenue expenditure can be claimed 100%. Then capital expenditure, however, capital expenditure does not include cost of land. Further, no depreciation shall be allowed on the such asset. That is 100% allowed. Whatever your revenue expenditure, 100% is allowed, and even the capital expenditure cannot be claimed. Okay. Then contribution to outsiders. So you're contributing to some other laboratories to invent any medicine or any other items. Okay. In such case, approved universities notified, which should be notified. Approved universities, colleges, institutions, 100%. Social statistical research, 100%. Company having a main object of research. So if after the scientific, if assessee is engaged in manufacturing or biotechnology, In such case also he can claim 100% depreciation. Next, my preliminary expenses. My Indian company, okay, where I've incurred the expenditure initial stage or start of the business. Such case, I'll be calculating my deduction of for that every year. So it can be claimed over a period of 5 years. Then for that current year, 1/5 of actual preliminary expenses, expenses, or maximum of 5% of your cost of cost of project or capital capital employed. In this, whichever is higher, that amount will be taken for the calculation of 5%. In that, whichever is lower, amount will be taken as preliminary expenditure, and the balance for the 4 years will be carrying in the financials. So up to 5 years you can claim. Whereas in any other resident person other than Indian company, any other means my partnership firm, right, or my AOP, in such case also same. The cost of project. Okay. Then example is, if my cost of project is 97 crores, capital employed is 100 crores, and actual preliminary expenses is 7 CR. So first, cost of production or capital employed, 97 or 100, whichever is higher is 100. 100 into 5%, 5 or 7, whichever is lower. So on 5 lakhs, 1/5. So first year I'll be claiming 1 lakh, sorry, 1 crore as my preliminary expenditure. So amount expressly allowed as deduction. So these are the subsections of section 36. So where you can claim 100% depreciation if the insurance premium is paid towards the stock in trade, if the premium is paid towards the Federal Milk Cooperative Society on the life of the cattle owned by the members, insurance premium on the health of the employees. Then next, the commission or bonus to the employees is allowed. Okay, is allowed as per section 36(1). But condition is it should be an actual payment. Then interest borrowed on capital, okay, will be allowed as an expenditure, will be debited to P&L unless not on provisional basis and actual payment basis. Employer contribution towards the recognized provident funds like EPF, okay, and employers contribution will be allowed as expenditure unless you have paid within due date. Within due date. Clear? Else it will become the income of the business. Okay, as and when you pay, you can claim the deduction. Whereas employee contribution is disallowed if you don't pay within due date. Clear, right? So if I have an EPF pension, right, I have employer and employee contribution. So what is the due date to pay my what EPF amount? Due date law we have finished 15th. Yes, 15th of every month. Tomorrow is my due date to pay my March month. Okay. So there was a technical error, technical glitches while filing my EPF return, or I didn't have enough fund to pay the EPF amount. Such case I paid on say 28th March. So now, as per income tax, is my EPF amount for the employer is allowed as a deduction? Just from 15th, I've delayed for 20. No, is yes. Yes, no, no answer. It is not. My employer contribution is allowed as deduction. Employee, what about employee? Employee contribution. Well, I paid within after due date also at least I've paid, right? It should be given on payment basis, no? Why? Why it is not allowed as a deduction? Why employee contribution is not allowed as a deduction? Why question? Yeah. It will be your deemed income. Deemed income where employer was supposed to pay within due date. Within due date, okay, but he has not paid. He has utilized that amount, right? So to that 5 days. So even if it is a delay of 1 day also, it is not allowed as a deduction. So even though you pay to the EPF account, you cannot claim as a deduction under income tax. Clear with this? Employer and employee payment. Employer the payment will be considered on the payment basis. Employee should either, if you pay within due date, you can claim the deduction. Hence, it will be my deemed income. Okay. The rest, you can see my pension scheme is allowed. And same, approved gratuity fund and employees contribution. This is, but here in my next line, provision of section 43 does not apply. Please make a note. Employer is allowed, but employee is not allowed. Okay, because as I have already deducted from the employee's salary, but I'm not remitted to the government. I'm the intermediary, right, for that part. Bad debts are allowed as a deduction. Okay, but the recovery will be, if subsequently I recover, then will be deemed to be my income. So expenditure in the course of promotion of family planning, STT, security transaction tax paid, and CTT, commodity transaction tax paid, banking cash transaction tax paid is allowed as deduction. Mark to market loss or other expected loss as per ICDS. Mark to market, my stock realizing or net realizable value. Okay, pro rata amount or discount on zero coupon bonds and expenditure incurred by a cooperative society for purchase of sugarcane at a price equal to or less than the price set by government. Example. So here in my section 40A1, what we'll explain is, if the TDS is paid, return is filed, can I claim depreciation? Sorry, depreciation. Can I claim expenses? TDS is paid. Claim depreciation, sorry, TDS. Yes, I can claim TDS. If I've not paid the TDS. What? So 30% I can't claim. Yes, it is disallowed. Okay. So I now when I have filed, see, on 30th September 2024, now 30% disallowed. Yes. If I file the return, okay, now My tax audit report is filed. Okay, now my tax audit report is filed. IT return is not filed. I paid on 5th of October. No? Can I claim the expenditure? Okay. Yes, you can't claim. But what about this 30% if claimed, if paid on 11th November? In which financial year I can claim? Subsequent year. Yes. And one more. So initial, prior to, I guess, 3 years back, initial we used to file first IT return. Thereafter, we used to file audit report. If you know, okay, in our old portal, we used to file our IT returns first, then an audit report. But now, because now we are filing audit report. Audit report is technically, I'm filing my balance sheet and P&L, right? How can I change? So do I claim here? But in my tax audit report, I'm showing my expenditures, PF data, EPF data, TDS data, right? So how can I claim after 30th September? Tell me. Clear? So whatever I need to claim before 30th September, before filing at least my tax audit report. Then it will be what if you filed after your tax audit report you have paid also. It will be in that year. It will go. The 30% will be disallowed, and you can claim it next year. The next, do you know about equalization levy? So what is the percentage equalization levy? Recent days it is very much applied. Yes, recent days. Digital हो गया 6%. What are the services where equalization levy is applied? Services where equalization levy is applied. In order to avoid double taxation, online advertisement, yes. Any other? Only online advertisement. Only that. Only on that. How? Yes, payment to a non-resident. But for condition, it should be on service, online advertisement, or digital advertising space. So, example, if I'm giving an advertisement in Facebook is not an Indian company, right? Okay, where they give a particular slot, or I'll ask that my advertisement should be coming frequently, should be seen in Facebook. You can see some few ads coming in your Facebook while scrolling. Social media influence, yes. So where the payment is made to an Flipkart company, sorry, not Flipkart, Amazon, sorry, Facebook. Such case, equalization levies apply. Well, to avoid the double taxation effect. Then my next question: if I have an example, I'm saying the advertisement coming of Amazon. Amazon will be getting the pop-up advertisements, right? And do you has an one establishment or a permanent office in India? Is Amazon having a permanent office in India? An establishment? Yes. Such case, equalization levy is applied. How? How? Please tell me. How? If I'm paying directly to Amazon, which is situated in foreign, they don't have the what? The permanent office or an establishment in India. Such case, a equalization levy is applied. Whereas here, no. Reading in India, yeah, they have a website. You'll get advertisements also, right? Online digital advertisements. Okay. So, my first condition is it should be an online advertisement or any provision for digital advertising space. I'm giving a space. So to get the pop-up of that message. Okay. So I want to run an ad. So you need to pre-deposit with that company. So in Facebook, I want to run my business ad. Such case, I need to pay to the Facebook company. That time, I need to deduct TDS. I inform equalization levy at 6% and pay. Okay. Or facilities, services for any other purpose of online advertisement. Okay. As and when otherwise services notified will be included in this section. Then the the exclusion is the person is a non-resident but has a permanent office. Amazon has an establishment like his agent. Do you know, right? E-commerce operator. I have an e-commerce operator in India. Agent. GST. He is liable to pay GST on RCM basis. Combine all the four subjects here where my e-commerce operator, Amazon as an agent here, he'll be liable to pay GST and for him equalization levy won't be applicable in India and requested services linked to that permanent office or establishment. The total consideration amount to be paid to specific service payable or received is less than 1 lakh. If it is less than 1 lakh, no need to deduct equalization levy. The next, in order to avoid the double taxation effect, an income chargeable to tax as fees or royalties for technical services will not be included in equalization levy. Clear with this, right? So at 6% I'll be charging. There's an example where Rohan is as advertised and on Facebook and is paid 2 lakhs. Such case, what we will do? 2 lakhs. So you need to deduct TDS. TDS at Rohan will deduct TDS at 6% and pay to the balance he will pay. Clear? It should be minus small mistake. On 2 lakhs, the TDS should be deducted and paid. My general section. not personal. The expenses, whatever claiming, should not be personal expenses or capital in nature, should not be present under section 30 to 36. That is from my initial repair insurance and insurance premium paid or payment made to any recognized provident funds contributions. Okay. So in that case, it should not be classified, must not be paid for activities which are offense and prohibited by law, should be incurred purposefully for professional or business, must be paid occurred in the previous year. Okay. So here, every time this question will be raised, often GST amount during the course of regular business paid, when the GST amount becomes cost to the business, means when your output is exempt, you can't claim the input, right? Your input becomes the cost to the company. Such case, GST can be claimed. Can I claim GST? Why no? My output is exempt. I can claim as expenditure, right? Yes. Excise duty. I can't claim any credits, right? In such case, like example, like excise duty paid on alcohol, petroleum products, claim as cost. Custom duties, where certain duties which are paid is not able to like transfer the credit, either credit or basic custom duty is not refundable, or claiming the credit. Such case I can claim and debit to my P&L. Income tax. Why income tax cannot be claimed or not allowed as expenditure? Why? No, yes, I've given, but why? Question is why? Personal income. First, I'll do my accounting, then IDT, then with all my IDT costs, then yes, tax is paid on profit. Tax is paid on profit, but here this is tax is paid on my day-to-day running of business. So this is my balance sheet item, right? If you remember, balance sheet item, right? What's my entry if tax is paid? Provision entry, okay. Debit to capital account, okay. Yes, income tax is a direct tax which is borne by the assessee himself for the profits. Okay, then what about the interest? GST, interest I paid. So I understood I made a mistake. So then I'm following. Such case GST is allowed. Nowhere GST is prohibited. In income tax it is not allowed. You have delayed. Okay. Then my penalty. Next, penalties under any of the taxes are not allowed. Where see must not be in the nature of offense and prohibited by law. What about late fees? Is late fees allowed? Delayed. Late fees. Why is it prohibited or an offense? Filing the late return, is it an offense? I didn't have fund to pay. No allowed. When it is allowed. Late fees is allowed, but your penalties are not allowed. Penalties, when it will come? When you have not followed the certain conditions or certain rules and regulations are not followed by the assessee, that case penalties are levied. See, penal in nature, but late fees there, nowhere they have told. But How can it be every time of carelessness? If I didn't have the fund to pay the tax, I can delay the payment, right? Next. So next, expenses expressly disallowed. Advertisement with political party deduction or deduction. Okay, political party or this is allowed as deduction under 80 GGB as a donation. If expenses for business purpose. So any other expenses unless of political party, it is allowed under section 37. Next, proportionate deduction. If so, I had a maid. Okay, she used to clean my office also, my residence also. Okay, so in 8 hours, in her day work, she used to clean and come 2 hours she used to do in my house and balance 6 hours in the office. Such case, can I the expenses for my personal expense can make the salary be allowed? Yeah, yes, sir. Expenses. See, I gave only for exempted goods. You know, in some cases where when your output is exempt, but if your output also is taxable, it doesn't come in your balance. It won't be your P&L item anymore, right? Your GST amount, it won't be your P&L item. It will lie in your balance sheet, and the purchase which will be debited to P&L will be excluding GST amount. Yes, 20% is disallowed. To the extent of office uses, allowed. Yes. Proportionate deduction. Okay, the next, payment to relatives. So my brother had a pulses and grain business. Okay, and so I know him. So instead of what selling the selling price in the market is 10,000. Okay, so in order to show an excess profit, he sold me in 15,000 invoice. 15,000 invoice. Okay, and he returned back maybe 5,000 in cash. Okay. In this, what amount can be disallowed? Yes, 5K. So, and inflating the price in such case, it can be disallowed. That too, if in a reasonable amount, if I've sold even 10,000 only, it would have been allowed. The only of excess amount will be disallowed. The relative means above, below, and next to us, brothers, sisters, husband and wife, and they are linear and ascending. Okay, as per income tax, firm partners and their relatives, HUF members and their relatives, company directors and their relatives, any other person who holds substantial interest, that is 20% or more. Clear with this? 5,000 is disallowed. Yes. What is my limit to maintain books of accounts? Limits. Now, it's your turn to answer for all the questions. Limits. No, clear. No, year is 6 years. 6 years we need to maintain. Limits to maintain books of accounts. Maintain, not for tax audit. What is the limit? Limit. Yes. If in case of professionals, 1,50,000, and if in a case of business or profession exceeding 2,50,000, or sales or receipt exceeds 25 lakhs in preceding 3 financial years. The books will be maintained for the 6 years from the end of relevant financial years. Next question. Tax audit limit. Tax audit limit. Business or profession 50 lakhs. What about the, profession 50 lakhs and business? Yes, 1 lakh. Yes, not 2 CR, madam. 1 CR, 10 CR, right? Tax audit exceeds 1 CR, then turnover limit, one more point, where shall be not liable for tax audit unless your total receipts or total payments are less than 5% or up to 5%. If it increases the limit, if the cash payment or cash receipts are more than 5%, in such case, 1 crore limit will be applicable and you need to file the tax audit report. If it is less than 5% and you have less than 10 CR income, such case, no need to file the tax audit report. Okay. Then I have one more 44 AD. This is my current year. This year for financial year 23-24. Please take care. Revised limit. Revised limit for presumptive taxation, where initially I had 2 CR, now 3 CR. This also has a condition. Hence, you should follow 2 CR condition. And for profession, 50 lakhs, it has been increased to 70 lakhs, 75 lakhs. The condition is your at least 95%, my 95% of your receipts should be through online banking transaction. And up to 5% can be the cash transaction business. We have with this new amendment, Finance Act. Yes, but for my as a presumptive business, this presumptive taxation, new limit. So while calculating the business income, please take care of this presumptive income because there is an additional of 3 CR. Condition is you should have 95% of bank transaction. Can we move on? Where you will claim 6% on your turnover as an income and you have 50%. This is new. Then 48.3 cash expenditure, where your limit is 10,000. If you're making a payment more than 10,000, then it is disallowed. Disallowed under 48.3. Exception is under Rule 6 DD. So where you had a bank holiday, you need to pay such case, or where you want to pay. Okay, and any compensation or gratuity to some employee, okay, where they don't have the access to their bank account. In that case, the aggregate sum should not exceed 50,000, or where the salary is paid to employee who is in remote location. Okay. Yeah, those are in expenses, right? You can claim. Rule 60D. Yes, maximum 35. In case of transportation, yes. I've taken few illustrations, okay? And 43B. Amount not deductible in respect of certain payments, certain unpaid liabilities. So any tax, duties paid, okay, can be claimed unless payment, bonus, commission, right? The next, bonus, commission, interest on borrowings, bank loan interest, and interest on loans and advances from scheduled banks, leave encashment. So unless it is provided, leave encashment on actual basis, the amount should be given. Even the gratuity amount should be given. Right or no, sir? So can you tell me a new amendment? New amendment in 43B, a recent amendment. Please tell me the recent amendment. 43B, yes. H, MSME, yes. 15 days. If you are purchasing the items from MSME dealers, you need to pay them within 45 days with agreement. Maximum 45 days. Yes. If I don't have the agreement, 15 days. Clear. So here. See, is my screen is visible? Screen is visible, right? Yes. This is the new amendment, and in your tax audit report, please be careful on the what drop down section where MSME creditors are subject to confirmation. Please don't blindly add that statement in the tax audit reports before transferring the what report to the auditor. There is no agreement. Okay, in that case, due date as per the MSME Act is 15th March, where my invoice is 1st March, due date is 15th March. Actual payment has done is 10th March, allowed in this current year, right? 23-24. Okay, the next I'm taking serial number 3, due date is 1st March. Sorry, invoice date 1st March, due date is 15th March. I paid in 10th. I paid in 10th April. Such case, it will be next financial year. Clear? Whereas I have an agreement which where I'm paying in next financial year. Like if you don't have an agreement, 15 days. If we have an agreement in such case, as per the agreement, that is maximum of 45 days. Then you need to ask the confirmation, intimation of MSME registration. As like this, intimation. So whether you need to take the details from your vendors, whether you are a registered MSME dealer, please provide your details. So and he will provide the a copy of his MSME registration. Clear? Whether is a small enterprise, medium enterprise, he will disclose and provide us. MSME, yeah, give registration. Yes. Next. Payment to Indian Railways on actual basis. Then disallowance. Disallowance on partnership firm minimum as per the deed. What is the interest? 16.778%, but maximum of 12%. Salary bonus to the working partners, and remuneration is calculated is on my first 3 lakhs profit 1 lakh 50 or 90% of book profit, whichever is higher, and the balance profit 60% of book profit while doing profit and loss appropriation. Then next, last, we are coming with ICDS. ICDS. So what is ICDS? Everything is there, but what is ICDS? Is it compulsory? ICDS for our financial year, is it compulsory? Answer. Yes. Yes, it is compulsory. Okay. What is difference between accounting standard and ICDS? Difference between accounting standard and ICDS. Difference between accounting standard and ICDS. No answer. Income computation, it's a disclosure. Yes. Same. Okay. Yes, it is similar. So, first, ICDS is applicable to all except individuals. Individual who is not liable under tax audit. Okay. It's applicable to all except individual who is not liable under tax audit. Applicable those who follow mercantile basis of accounting. Okay. Then applicable for business and profession, and irrespective of compliance with accounting standards or Ind AS, you need to comply with ICDS also. And it is not, ICDS is not applicable for computation of book profit. Okay, book profit. Book profit means before disallowance, your P&L item. Okay, for the purpose of math. Okay, however, alternative minimum tax is computed on ATI, and hence ICDS is applicable for computation of AMT. ICDS is also applicable for computation of income on gross basis. Gross basis means from your revenue recognition, contract, and all. Then if there is a conflict between ICDS and rules provision, so ICDS, rules shall prevail over ICDS. Okay, ICDS is just a disclosure. Okay, where sections and rules prevails over ICDS. Okay, the net effect on the income due to application of ICDS is to be disclosed in ROI and tax audit report in the form 3CD. However, if a person is not liable for a tax audit, no separate disclosure is required. And Here I have yes. That's yes. The year 10 I notified ICDS. That is my first ICDS is accounting policy. See the difference is in accounting standard it shows the materiality, prudence, right? But here, accounting standards are applicable in computation of income. So you'll be accounting and disclosing as per accounting standards in financials. But in ICDS, there is no word like discussion of reasonable cost or what reasonable value in ICDS. That's the major differences in ICDS one accounting policies. You'll just disclose, but any significant to for the disclosure or accounting of significant matters, it doesn't provide. And materiality is not present in ICDS, where in accounting standards we insist on materiality, prudence in selecting the accounting policies. So in accounting policies can be changed if there is a reasonable cost. But in ICDS, the reasonable cost is not defined. Clear, right? That's a difference. Yes, irrespective of accounting standard or Ind AS, ICDS will apply while filing your tax audit report. It's ICDS is just a disclosure. It's just a disclosure. So, example, I was following the what depreciation in my company straight line method. So after 3 years, I got to know that written down value is more realistic to follow. So I just disclosed in my accounting stats per AS1 disclosure have done, and the effects are given in P&L. Whereas ICDS does not give that effect. That important about the materiality. Why the changes? The questioning where we have an accounting policy because the materiality effects here, it's not applicable. Next is ICDS 2. ICDS 2 is similar, net or realizable value. When you're when you're calculating the inventory, either net or realizable value, whichever is net realizable value, whichever is lower. Okay. The next construction contract. So ICDS is applied in determining the income of construction contract of a contractor. The contract revenue shall be recognized. There is a reasonable certainty of its ultimate collection. If the percentage, so okay, if the percentage of completion is done, then there will be a realization, right? But in ICDS, the advance money given to the contractor will be considered as initial, as an income, okay? And penalties arising in delay in contract completion shall not be reduced from the contract revenue, where the real estate developer, the project and the lease are also covered by ICDS. At present, no ICDS is recognized. Therefore, the provision of the Act in the ICDS shall apply for this transaction. So, there is a difference is the difference between retention money and in accounting standard and in ICDS. In ICDS, accounting standard for retention money, what will you show? Accounts. In accounts, retention money. Example, deposit is given to the government where you have taken you have taken a tender for taking of tender for construction of laying of roads. Yes, EMP amount. Yes, One is money deposit. So in balance sheet, which side it will be shown? Balance sheet, which side? Current asset. Whereas in ICDS, your retention money will be as shown, what will be realized as an income, reduced from the actual income. And it will be shown as your revenue. That's a difference between that line between accounting standard and ICDS 3, but still this has not come into effect. Okay. And revenue recognized. Revenue recognized, next ICDS 4, revenue recognized, there should be a reasonability of certainty of its ultimate collections. Okay. On the revenues recognized on the receipt basis in ICDS. Okay, where in accounting standard on accrual basis we will be recognizing, right? Then rest all are similar to our accounting standard. The next. So can we have a small break? 5 minutes break? 5 minutes break. So we'll be starting by.
Definitely, madam.
Yes, sir.
No, Prasad. You can start, madam.
Yes, yes, sir. So capital gains where there is a sale of property other than goods and services, right? Yes. When the property is held less than 24 months, then shares less than 12 months. Yes, property or shares less than 12. In case of land and building, 24 months, whereas in shares, okay, in that case, 12 less than 12 months, short-term capital gain. Okay, on the sale will be short-term capital gain. The next long-term means if it has been more than 24 months, land and building, then next shares more than 12 months. So what is short-term capital gain? An asset which are held less than 24 months, such as land, building, house property. Next, then few assets which is held less than less than 12 months, such as equity shares, preference shares in a company listed on recognized stock exchange, securities like debentures, bonds, government securities, etc., units of UTI, whether quoted or unquoted, units of equity oriented mutual fund, whether quoted or not, and zero coupon bonds, whether quoted or not. Capital gain. Earlier we had 36 months concept. You remember 3 years the property should be held in order to be eligible for long-term capital gains. Right now it is reduced to 24 months. That is from financial year 2017-18. Then same listed shares and bonds when it is holded less than more than 12 months, then classified as long-term capital gain. So calculation of the gain is first my sale consideration less my expenses related to that. Then next acquisition cost. If it is long-term capital gain, indexation will be available. If it's a short-term, there is no indexation benefit available. Then arrival of capital gain. After that, you can claim exemption under section 54, right? Exemption under section 54 Yes or no, sir? Or directly whatever the capital gain received is taxable fully. Yes. 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 So what does my section 54 tells? Section 54. Yes, reinvestment. So when you have sold the house property, so when you have sold the house property, that is house property, reinvested in another house property. Such case, whatever the cost of acquisition of that property can be claimed as expenses. There is one condition for that. What is the condition? What is the limit? Yes, reinvestment within 3 years. The limit? Not the 3 years. One more limit is there. If the cost of asset exceeds 10 crore, what is my maximum exemption available? If my cost of asset exceeds 10 crore, what is the maximum what exemption available for me? Yes, 10 CR. Yes, now it has increased to 10 CR. In Finance Acts 2023 changes 10 CR in 54. Section 54 change. Okay, not 2 CR, it is 10 CR. Then one more is if an individual sells their property, investment in bonds. So it should be invested within 6 months, notified by the central government, and it is not to be redeemable within 5 years. And the investment whatever invested should not increase more than 50 lakhs. That is 54 EC. Yes. Yes. Okay. Two are very important. Where when a residential property of a long-term asset, so exemptions are not available for short-term capital gains. It is only available for long-term capital gains. Where taxation exempt is there, it is available only for individual and HUF. And the condition is either you purchase 1 year before or 2 years after during the sale period, or if you are going for the construction within 3 years. And for my assessment year, means this current assessment year 23-24, the Finance Act tells the restriction of maximum exemption to be allowed in case of Section 54 is the cost of asset exceeds 10 crore, the excess amount shall be ignored. Finance Act 2023. Please take into consideration for this year's tax computation. No, there is no application for exemption claiming, but automatically it will stop from your software. If you are using like any softwares like Genius or Winman, it does not allow. Even if you type 10 CR, the maximum limit will be there. If you're typing 15 CR also your cost of investment, it will take the maximum of 10 CR only. Rest 5 will be disallowed. Investments in bonds, like NH bonds, okay, allows the exemption from capital gain tax on sale of residential properties and then infrastructure bonds within 6 months from the date of sale. So NHAI bonds, REC bonds redeemable after 5 years. If redeemed before 5 years, then it will be charged to the tax. Like the capital gain will be deemed and it will be charged to the tax. Then Sure, the investment should not exceed the 50 lakhs during the current year and succeeding year. 54F, any long-term capital asset other than residential property, your sites, right? That is any long-term capital. The new asset purchased is your residential property. Time limit same as 54. The exemption is calculated as cost of new asset into capital gain divided by net proceeds, your sale amount, your profit, and your cost of new asset. Clear? Then the rates, if it is a long-term capital gain, capital gain calculation, sale of equity shares 10%, or units of equity oriented mutual fund 10% over and above 1 lakh. Okay, then others will be 20%. The next short-term capital gains tax will be calculated if STT is not paid. It will be calculated under normal slab. If STT paid is 15% tax on short term. Capital gain bonds are notified like NHI bonds, rural development bonds, rural electrification bonds. Such bonds will be notified by central government should invest in those bonds. Okay. Yes. Even the STT is not paid, it should be more than 12 months, right? Long term, yes, under normal rate. For sale of site, up to how many percent we can show the expenses? There is no percentage, the actual expenses incurred, actual expenses incurred can be shown. Yeah, commission and brokerage, you can show as an expenses, but pay via bank. Don't pay via cash. If cash expenses, sometimes they may disallow also. Yes, next. Small topic is my income from other source. So, any where the income is not fit or is not divided in any other 4 slabs, like either it is not classified as salary or commission, sorry, salary, house property, or capital gains or business profession, then the balance, it's a residual head. Okay, in that we will classify the balance income, such as my interest on savings account, FD, recurring deposits, rental income earned from the property owned by the individual. Okay, either deemed, okay, sorry, rental income earned from a property, not this. Okay, deemed owner. Rental income earned by the deemed owner. When morning we discussed, no, owner, he had let out the property to A, but he has sublet to B, right? Subletting, income from other source, dividend income earned from shares and mutual funds, income earned from winning lotteries, and it will be taxable at marginal rate, income earned from letting out machinery or equipments, any gifts received exceeds 50,000 in a financial year, commission or brokerage income, then family pension. Okay. Clear up to here? So, the last small topic, set off and carry forward. So once the business or any income is calculated, so under 5 heads of income, then either you'll have an income inflow or positive or negative. That is, negative is loss. So in such case, we have a provision to carry forward to certain period. Okay. Then if you want to carry forward the specified losses, so in such case, you need to file on or before the due date of filing IT returns. If filed after due date and you're claiming the loss, so that losses cannot be carried forward. So first loss from house property. So in such case, 8 years you can carry forward, but it is not mandatory. But rest in other cases, it is mandatory to file the IT returns on or before the due date, before to claim the to carry forward the losses. Whereas normal business, 8 years, speculation business, 4 years, and specified business under section 35 AD. Specified business means research and development or any where the company is working for nuclear projects, example, which is specified from the government. In such case, the profits, okay, in such case, the loss can be carried forward and there is no limit. Short-term capital loss. Short-term capital loss, both short and long-term, you can claim 8 years. If it's a long-term capital loss, 8 years. Then owning, maintaining, racing, okay, that will be 4 years. Yes. Then first, you can set off the losses within the heads. Intervals within the heads. But there is an exception. Exception is the losses from speculative business will not be set up against the non-speculative business. Okay. Against this profit or no, sorry. Clear, the losses from speculative business will not be set up against the non-speculative business. The next, losses of owning and maintaining the losses will not set up against the profit of the activity of owning and maintaining resources. No, sorry, only. Just. Yes. These are the incomes where it will be set up against their own incomes. Okay. The speculative business losses cannot be set up with non-speculative, ordinary businesses. And long-term capital loss will only be adjusted towards long-term. However, the short-term capital loss can be set off against the long-term capital gains also. The next specified business will be set off only against the specified business, but losses from other businesses and profession can be set up against the profit of specified business. Why it is like that? Why there is no vice versa for speculative and non-speculative? Lending tender coconut, can we show in under? If it is classified as business, tender coconut business, tender coconut business, right? What is your main business? Main business, madam? Sale of trade of coconut, then it's a business. Why IFOS? Yeah, tuition income. Yes. But it is not a profession. But you can show under 44 AD. What is their main income? Is main income is a tuition? Okay. So we will just finish it off. Okay, my question is, why there is no vice versa of income? I have speculative business and non-speculative business, right? See, speculative losses cannot be set off against non-speculative losses. Sorry, non-speculative profit, right? But non-speculative losses can be set off against speculative profit. Why? Why? Or capital gains. If you come again, if you go for capital gains, where my long-term capital gain, I'll be paying 20%, right? Where my long-term capital gain tax is 20% and short-term capital gain, I'll be paying at 15%. So what is the thing is, my capital gains, the long-term capital loss will only be adjusted towards long-term capital gains. Okay, however, the short-term capital loss can be set off against the both long-term capital gain and short-term. Yes. Here you can evade the tax, right? Speculative business. And in long-term capital gain, while calculating long-term capital gain, you will be doing indexation, cost of improvement. There you can increase, right? I've done this improvement. Example, in the year of 2015, I constructed another floor. If I don't have a valid proof to show, in such case, cross-utilization of the credit has been not available. However, short-term capital loss, indexation is not available, one, right? Where the property is sold within within 24 months, indexation is not there. So actual transactions, you will get to know, right? Cost of acquisition and cost of sale, sale proceeds and cost of sale. The next, okay, how set off can be if it is interhead between the heads of income. Yes, heads of income, interhead. If I have the income from salary, I can claim loss from income. Sorry, from salary I can't, or the other sources I can, except from horse business, from racing, winning. Other than that, I can claim my house property, where my house property income I have. So under speculative, I can't set off. For non-speculative business, I can set off. The next, income from other source, such as here is the chart. The main thing is here. Do you know in your new regime you can't carry forward your house property loss? Do you know? Only it will get exhausted in that year. House property loss from house property cannot be carried forward. New regime, who are opting for new regime, cannot carry forward the house property loss. One morning, as we discussed, the interest is allowed only for my rental, where my property is let out, not the property which is self-occupied. One. Then one more is the 2 lakh will not apply for their let out property. 2 lakhs maximum limit. Whatever the interest which you have shown, whatever which you have paid, that much amount can be claimed as loss, right? Can be claimed as deduction. The balance, if the excess interest is paid, or you have a loss, you cannot carry forward. This is one thing in your new regime. Clear? Clear? Clear with set off? Yes, 24B, sir. 24 will be only for let of property, not for personal. Sorry, not for self-occupied. And after claiming, even if you exhaust all the after deduction claiming what set off, you can't carry forward your house property loss anymore in your new regime. Next, deductions, which you know normally from 80C to 80U. Deduction can be claimed by individual. 80C 1,50,000 is my bracket, right? Yes, yes, no. And 80D. Yes, 80C is 1,50,000. Maximum 1,50,000 you can claim. 80C pension fund. Whereas in your new slab, new regime, you cannot claim this benefit. 80CCD 1B, additional deduction of 50,000 is available in respect of employees and assessees contribution to National Pension Fund. If it is employer's contribution, you can claim as deduction, that is 80CCD 2 in your new regime. 80D towards health, maximum of how much? 25,000 each maximum. If your parents are together, 50,000. If your parents are covered, okay. Then 80DD deduction in respect of maintenance, including medical treatment of dependent, who is person with disability, not allowed in new regime. Okay. Payment of interest of loan taken for higher education individual actuals, 80EEA. This now it is not applicable. So now also it's applicable where the loan is taken between 2019 to 2022. So additional deduction will be available, additional of 50,000 is available. Next, deduction in respect of rent paid. Yes, if you are claiming for the donation, so excess paid, you can pay up 2,000 in cash. It is allowed. Excess payment will be disallowed. Yes. Yeah, it will come under 80CCD, no? That's not allowed. It's not available. See, only my employer's contribution. Only my employer's contribution is available. So, see, this is the chart. Green one is available. Red one is not available. So, from 8 in future, maximum government intention is what to on new regime, right? So, almost your deductions will get closed, right? 80C, 80D, 80U. Huh? So, in that exception, right now we have only deduction for 80C. Sorry, 80C in, sorry, not this. Employers' contribution towards NPS. Okay, then contribution to Agniware Corpus Fund. Then next, exemption on gratuity. That's it. Only 3 are in what in deductions. Rest all not available. So changes. No, you cannot. See, if it is self-occupied, point number 1, my condition is self-occupied. New, in new regime, you can't claim only. New regime, you can't claim deduction. loss, I mean, you can't claim deduction. 24B is not there. Then next, if you're claiming for let out property, what is the rental income? If my rental income is say 1,20,000, 1,20,000, it will get exhausted. Balance 80,000 cannot claim. You cannot claim. In old region, you can carry forward. How many years? At one time, at one point of time, based on the statistics, one point the old regime shall be stopped, right? Why there is a favor of more and more for new regime? See, 7 lakh. 7 lakh I can claim. Before you used to claim under section 80G, donation to charitable trust and everything. Now, if you pay donation to the only for corpus one, that is Agniveer fund. So whatever you pay is 100% exemption. Then employer's contribution 50,000. Then next, what are the standard benefits? Okay. If an employee, sorry, if a salary holder who has the salary, okay, of 8 lakhs is fully exempt. Where his employer contribution is 50,000, right? And he has a standard deduction of 50,000 and 7 lakhs. Other than employees, it will be 7 lakhs, right? Where I have a rebate of 25,000. How? See, when it comes for assessment only, you'll get to know what documents. One, first of all, for self-occupied rent in a new regime, it is not allowed. Then, let out property, bank transactions will be declaring the income. Either you will be declaring or the person who is a tenant, he will show that from such person, I'm in a rented house. So it will be reflecting in your annual information statement. So done. If employer contribution added as perquisite. Yeah, perquisites are allowed, right? You can't, once if you have opted for new regime, you can't opt out. No. Rental receipts given, all the details, yes. So morning I told no the issue which one of my cousin faced, where he thought as before, way back we had our old portal in our 2017 where SFT transactions were not shown. We were issuing, I mean, employees were giving anyone's PAN card, even their mother's PAN card also they had given, submitted in the company in order to avail the HRA, right? Now HRA only is not available for me. So here, SFT transaction for my NR, non-resident in India, is showing that you have an income of 5 lakhs house property. Then where is the house property? They, based on her bank transaction, based on her bank transactions and the income displaying in SFT, because his brother had shown her house property, she got the notice, filed the returns showing the income. So there is right now no limit, 100% 80 CCH, right? Agniveer, 100%. Government notified fund, right? One, you are only saying it's a residential building. Okay. So in my GST, if the residential building is used for my personal use, it is cost to me. If I am a builder, I'm just building the house and selling off. I'm building this and selling off. In that case, I can claim the GST. Okay. Or where I'm giving the, see, I'm Mr. A. Your A and B are there. A is a builder. He is building and selling off the houses. In such case, he can claim GST. Right? Where he is a contractor. Okay. If you pay 2 lakhs, okay, for labor he will get, right? For me. Such case, raw materials are brought by me, everything is brought by me. In such case, GST cannot be claimed. Today, any other doubts? Session-8. Yes. See, exemption, leave encashment, voluntary retirement, benefits will be allowed, but it is paid on actual basis. Actual basis. Q&A tomorrow we will be doing. Tomorrow and Saturday. So ready to occupy. Building is ready to occupy. First, builder will be liable, right? Three lakh and 5 lakhs. Yes. 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 See where if I have a pure agriculture, in such case, my income is purely an agriculture income, it is exempt under section 10, right? Under section 10, it is exempt. Where I have 3 lakhs from agriculture income, then 5 lakhs from non-agriculture income. Say it is my professional income. Such case, what will happen? It's not exempt. Whether it is exempt, taxable, tax to be paid. So you will calculate first, you will calculate as if the business has not been, as if I don't have the agriculture income. So calculate and amounts to 8 lakhs. Total, my total income is 8 lakhs. On that, I am calculating under old regime. Please, under old regime, I am calculating. So there, 12,500 and 60,000, which amounts to 72,500. Then next, I took only my exempt incomes. Up to 3 lakhs is my agriculture income. Then 2 lakhs 50, the maximum limit for an individual. Okay, the maximum limit. Then 5 lakhs 50, which is more than 5 lakhs, right? Then taxable. So in that case, from 2 lakh 50 to 5 lakhs, 12,500. Then 20,000. Sorry, on 50,000, 20%, 10,000. So total tax on my agriculture income, on my exempt income is 22,500. So tax liability will be 72,500 minus 22,500. That will comes to 50,000. Then a cess of 4%. Total tax liability is 52,000. Maximum. See, there is no maximum, sir. Maximum I can have 8 lakhs also. 8 lakh income also. But what usually happens is I have a agriculture land, but it's in my mother's name. She don't have any other income. So whatever the income which is derived, okay, 3 or 8 lakhs is exempt for me. So literally we are doing like that. Parents who don't have any other income, they have pure agriculture income. Yes, full agriculture income, it's an exempt. So we'll be showing pure nominal, we will be showing in 2 lakhs, either 2 lakhs or 50,000 to show that we have some agriculture income, not at one go to show the 8 lakhs. That's it.
Madam, one interesting question is there.
Yes, sir.
Goat purchase and sale, is it exempt livestock?
Okay. Livestock.
Whether livestock is agricultural activity, that what actually they mean.
Sir, it is taxable, no, sir.
No, what the question they asked is, goat purchase and sale, is it exempt or taxable? If the income is above the threshold, obviously it comes as a business.
Business.
It cannot be treated as a agriculture. One of my clients selling his residential site and buying new site. But he is going to construct house in old site, which is already in his name. Can he claim exemption in capital gains? What type of question it is? No.
No, that's all.
Client selling his residential site and buying new site.
Yes.
But he is
Okay.
going to construct house in his old site. He can claim no.
My client selling residential, yes, buying a new.
Whatever the property they sell, capital gains will come. But if the investment and he is buying a new site, it is out of box. However, he is constructing an house in the old
Yes.
site.
Yes.
If it is single house, then he can claim the exemption, what I think.
So for 54F, that provision is not there. Only for section 54F, so 54, one house. But
One
in
house.
54, yeah, 54F, that provision, I mean, that one house is not there. So,
Old site, he is telling. He is going to construct a house in old site, which
but
is already in his name.
he's saying I have 2 sites.
He has 2 sites, one is sold. In
Sites.
one site, he want to utilize all the money realized out of the one site sold and want to construct an house in the old site.
Okay.
Then he
You
is,
can claim, no, sir.
he can claim subject to the progression of the construction of house, I think. Because once he sell, entire money will come. But construction
Yes,
will
sir.
not happen in a day or two. If there
Yes,
is a
sir.
changeover of the financial year in between, so he
So
has to
3
take care.
years.
3 years,
3 years.
but till then
No,
what
no.
he has to do? He has to keep it in an account separately. He
Yes,
has
sir.
to show the utilization. Straight away, if he is keeping in his accounts and doing any other, this one, it may not come.
Yes, sir.
How to show land appreciation or let it be continue. Sir, you cannot show any land appreciation. Only at the time of sale, the realization value minus any index value and the cost of acquisition is to be deducted. Right, madam?
Yes, sir.
There is no provision to show any that revaluation
Evaluation.
appreciated value. Okay. Many questions. We have to conduct a separate session, interaction session only for then. Okay. Same day purchase and same day sale, goat. Sir, if it is a turnover, obviously it's a turnover. Construction of old house. Reinvestment in construction. He must construct within stipulated period. 2 house. Now there are 2 houses. If it is a second house, I doubt as per the latest amendment, it should be 1 house. How to prove income from agriculture? Any proof of document required? Madam, how to prove the income from agriculture? Your declaration itself is a proof.
Yes.
If it is not satisfied, they will ask you all the proofs.
Your Kata copy also will show, no, sir, proof that
No.
agriculture
They
land.
are asking the proof of income.
Proof of
Just
income.
by having a land does not mean you are earning from that agriculture.
Yes, yes, sir.
You should have
Cash.
that agricultural activity there. And the produce must be sold and you should farm it. You should be, as an agriculturist, you have to plow and you have to earn. If you lease it, then it will not amount to the agricultural income. Right now, madam, leasing of agricultural land.
Yes, sir.
It's income from other sources.
Sir, what about the like we have planted coconut trees and orchid trees?
It's agriculture only. Plantation.
Plantations.
Plantation. It comes under this one only.
Agriculture.
Yes, agriculture. Capital gain account. Yes, capital gain account, they have to deposit and withdraw in accordance to the requirement of your progression of construction. And only that is going to be allowed. Otherwise, it may be disallowed. Okay, flat amount investment before 6 months. And investment name wiped it up. Sale of plot and amount investment before 6 months. From sale of plot. But invested in the name of wife. Deduction available. Okay, if the money is invested in the name of your spouse or dependent children, definitely you can claim the deduction here because the money which is realized by way of capital gains, the whole of that money should be invested. Right now, madam?
Yes, yes, sir.
Exemption can be claimed only in respect of one residential house. Property purchased or constructed in India. If more than one house is purchased or constructed, then exemption under 54 will be available in respect of one house only. Right, sir? You are right. Sale of agriculture land above 25 km city limit is exempt from capital gains. Sir, if it is not a capital asset, okay, there is a parameter to ascertain what is capital asset. Even if you have a land, an agriculture land within the limits of what actually the parameter says, okay, then it becomes a capital asset. Even though it is an agriculture land, it's a capital asset. Okay, that parameter you have to adopt. If it is not a capital asset, the sale of agriculture land does not come. Within 6 months, should invest in another construction, full amount is exempted. Within 6 months, that's not 6 months, sir. Invest within 6 months or the due date of filing your return. Or you have to buy an house or you have to construct a house within the financial year. Or it should be completed within the period of your filing of return. All these things will come into bills. Sale bills to society. APMC sale bill to society. Yes. Sale bill to society, Patti, agriculture, Asami. All these things were definitely there. Certificate from local authority, okay. Certificate from local authority subject to the realization and all other things, because nowadays that restriction of cash is also there. If authority gives a certificate, you have to sell your producers within the vicinity of the APMC. Then that APMC dealer has to pay you through a bank only. All these things you have to take, and you cannot say, I have sold, a cash has been received. That cannot happen. Takkapatti, horticulture, yes, horticulture. Coconut trees and all that plantation, all that will come under horticulture. But coffee excluded, yes, coffee is treated as separate, this one, growing of coffee. 43B, trader applicable, khata certificate, panchayat, grow, site selling, clear housing within 2 years, exam test within 2 years. But till that 2 years, where you have to keep the money, that you have to check once. Where you have to keep that money, you cannot keep in your house. 43BH applicable to traders? No. In no way the traders are affected by this 43BH. Only the manufacturers and service providers registered under MSME are allowed. House constructed in Gunta plot, no problem. They have not told where you have to construct the house. You should have the proof the house must be there. Whether you are constructing where, that is a different one. Madam, Indian employee getting restricted stock unit. Sale proceeds is taxable in India, madam?
Yes, sir.
Indian employee getting a restricted stock unit. Sale
Stock.
proceeds is taxable in India?
Stock is ESOP stocks, right?
Restricted stock.
Prohibited. Then it is taxable, sir.
It is.
Prohibited stock will be taxable.
Yes. Good evening, sir. One doubt, for example, a same year, I purchasing a land, which is cost of 50 lakhs. Repair and brokerage cost is around 10 lakhs. And I am selling that same land is for rupees 90 lakhs. And again, I am purchasing a flat in joint wife, husband and wife property is at 60 lakhs. So remaining rupees 30 lakhs, I have invested it to specific bond. For this above condition, how to capital gain is to be computed. Sir, first, the same year you are purchasing a land and you are developing it and you are selling the same. First, it does not qualify into the capital gains at all. It is a short-term capital gain and it is to be treated as a normal income. If you invest also, that is not going to help in any way. Because within 1 year, it is not a capital gain. Short-term capital gain investment is also not considered. Right now, madam?
Yes, sir.
Short-term capital gain, if reinvested within that year, whether that exemption is available, that gentleman is asking.
No, sir. Exemption is available only for long-term capital gains.
Yes. Short-term capital gain is treated as normal income. I opted out for 44 AD 2 years before and I filed 44 AB for last 2 years. That lock period balance 3 years. I should file with audit report or I have to file P&L balance sheet and ITR 4.
ITR 3. Need to file, sir.
He has filed 44 AB means he has to continue again for 3 more years.
3 years. Yes, sir.
Firm partnership sale turnover below 1 crore applicable in 44 AB tax audit. Below 1 crore, totally not applicable, or irrespective of the entity. Right now, madam?
Yes, sir.
Please explain next meeting gift from family members. Okay, sir. Well, sir, what is the cash limit for agricultural payments? Sir, there is one rule called 6DD.
DD.
In accordance to that, you have to follow. If you prove there are no banks available and you don't have a bank account, all those things, then only your cash transaction can be accepted. Otherwise, only 9,999 per day is accepted.
So, but in villages, they don't accept bank transfer only, sir.
Nowadays, that amendment has already made, madam.
Sir, we know, sir, but they're like who come to our land, no, sir, for agricultural work, they'll say, please pay in cash, else you won't come.
Then you have to draw a check and you have to get their signature. Then you have to pay cash and then you have to go to the bank and you have to withdraw in their name. But even that encrossed check will also amount to a cash only.
Yeah.
At least we will have a safety measure to say that it has been paid to them only.
Okay.
But we have to create the awareness. Of course, there are certain compulsions which cannot be, practicalities cannot be explained, especially in that rural areas. That's what actually the Jan Dhan accounts are actually opened for. UPI has been given, everything has been made for that. You have to create the awareness. I claimed input tax credit for machinery purchase on 1/10/17. Still no utilization. Now only start the business. I adjust this ITC. Definitely now you can adjust it, sir. There is no time limit to carry forward your ITC. Utilization is only having the criteria. You have done the correct job. Now you can utilize. In my view, residential houses will be allowed with certain terms. That is 2 crore capital gains only once. Agriculture converted in sugarcane into jaggery is exempted agricultural income. Madam,
Taxable, sir.
agriculturist converted his sugarcane into jaggery and is
Yes.
and whether it is an agricultural income, they are asking.
No, sir. Only to the extent of agriculture income from sugar cane.
Agricultural producers. Agricultural producers.
When it is processed, the processed part will be taxable.
Cultivated alone can qualify. Cultivation. Yes. Salary getting in India but working in out of country, so is it taxable? Income or exempted? Salary getting in India but working in outside the country, is it taxable? If there is a DTAA, accordingly you can claim the exemption. Right now, madam?
Yes, sir.
In which country you are working and how it is paid. If there is a double taxation avoidance agreement, then only it will come to your rescue. Jaggery exempted under GST 5 kg, 10 kg, 30 kg. Sir, we are not asking about the GST. He is asking about income tax. You can claim exemption from jaggery under turnover tax, but income tax. Okay. My client. Oh, many questions are there. Now time is already 8:20. Okay, within 10 minutes. My client registered GST regular by a lorry for his business purpose and availed input tax credit in financial year and he is eligible to claim depreciation that financial year. If the asset is put to use in the same financial year, subject to that 50%, he can utilize the depreciation. If the lorry is used for the transportation of goods and he is paying the taxes on his output liability, then only ITC can be utilized. Right now, madam?
Yes, sir.
How to calculate capital gain sale of gift land or old property from father? The base value of the gift received, and nowadays as on 1/1/2001 is the markup value you have to consider, not the original cost or anything that will not come now. The value of the property evaluated in accordance to the guidance value alone will come. You cannot claim anything at any way of our calculation. Right now, madam?
Yes, sir. Now it has been changed.
It is to be adopted in accordance to that guidance value. In accordance with the guidance value, it is to be evaluated. Tax applicability for landowner and land developer under joint venture. Oh, it cannot be answered in a single line or in a single session, sir. It requires not less than 2 hours. Below 8% profit in partnership firm, it comes under audit, sir. If your turnover is below 1 crore, okay, you can draw the books of accounts and accordingly you can claim the remuneration. Everything is allowed. If it is below 3 crores and you want to declare 8%, so that 8% is net and it is deemed to be interest and remuneration paid to the partners. Right now, madam?
Yes, sir.
Above 1 crore and below 3 crores. This is applicable. Below 1 crore, you can claim entire.
So 3 crores also there's a condition if you want to go that up to 95,000, 95% of your transaction should be via bank.
Yes, definitely. But now that clause is 10 crores, no madam, 10 crores is 95%. 3 crores is now they are allowed
Yes.
up to 8%.
Okay.
So because that 8% is extended to cash, 6% is allowed to bank transactions.
Okay. Okay, sir.
Can we claim exemption in income tax filing of purchase of residential building stamp duty charge? Income tax filing. No, all those costs is to be included to your asset only and you have to keep it. All this cost you have to deduct at the time of your disposing the property. Till then, nothing. You can keep your books of accounts updated with you and you can keep all that asset. For firm tax audit is required because 8% profit is declared, tax is very high. That is your compulsion, sir. Can I get the PDF, sir? PDF is already kept in the chat box. You can download. Okay. Okay. Eucalyptus tree sold, which comes under agriculture income. Eucalyptus trees, if grown and sold, okay, if it is cultivated on your own and in your land, then it is to be treated as an agriculture. My assessee is for maintained books of account and showing book profit 10% and remuneration and interest to partner can claim. Sir, if the books of accounts are maintained and if it is below 3 crores, okay, even though if you declare 10% or whatever, it is deemed to have been that interest and remuneration is paid. You can allocate in accordance to your books. The computation is different and books of accounts are different. In computation sheet, you can do any exercises. How to show land appreciation only at the time of sale. Inflation index, guideline value. Yes. 1/4/2001 guideline value. Okay. TDS on purchase of house property more than 50 lakhs. Want some clarification? Please allow me to speak. Bhuvaneshwar ji, where you are? Bhuvaneshwar ji, are you there? 26 QQ. If it is above 50 lakhs, then that 1% is to be deposited. Bhuvaneshwar ji, are you there? Oh, sir, audit remuneration not allowed under 44 AD. Yes. Cash paid above 10,000 for catering. Is it 30% taxable? Cash paid above 10,000 for catering. It is to be disallowed under 43. It is to be clubbed as an income. Accordingly, whatever that slab comes, that slab rate is applicable, not straight away 30%. If you are under 5% or 20% or 30%, accordingly that will. My question is not clear. One of the men, he purchased goat and same day sell. So is it taxable or exempted because of turnover in the bank? Sir, it is a turnover and it is a business. If you maintain the books of accounts and if your turnover is above 1 crore and you want to prove I have not earned more than what actually the term is, then you have to get it audited and you have to file your return. ATC allowed stamp duty paid amounts. No. ATC will not allow stamp duty paid. Stamp duty on purchase residential building we can claim under ATC? No. No. Stamp duty paid. Sir, Loganathan, sir, can you throw me some light on it? Kindly share the week session study material. Sir, all the material has been already placed in the link, Google link that you can download. Okay. All the documents tomorrow evening, all the documents will be kept there. Now already 2 full sets and 1 half portion is already kept in the link that you can download the documents. Oh, that we will. One of the client has sold his old property and bought a new property this year. And he want to make it gift deed for his new property to his daughter. Can claim 54. First you occupy the building in your name and claim the exemption, then you gift it. Then it will be very easy. They can claim. Because straight away claiming the exemption under 54 may be a little cumbersome because you are going to gift it. Straight away, if you want to buy in the name of your daughter, you can buy it. Okay, and you have to prove that the same money has been used for the acquisition of that new property, which is actually registered in their name directly. There is no need of a gift document. Straight away registered in their name. Right now, madam?
Yes, sir.
If the property is directly registered in the name of the daughter to whom actually you are intent to gift the new building, if it
Yes,
is
sir.
totally purchased in their name only by utilizing all this, you can enjoy the capital gain exemption.
So in this case, one notice had been issued, sir. So the person he had distributed the cash, the sale proceeds of sale of house property.
Okay.
Okay, he didn't file the income or what IT return.
Okay.
Then second, he distributed between 2 daughters. Then
Okay.
after 3 years, last year he got the notice that they have calculated the capital gain and they are saying you're liable to pay. And he is a retired person.
But once, see, distribution of cash is nothing to do with capital gains.
Yes, sir.
That the people has to understand clearly. Hey, where is money I have already distributed is a gift. Why I have to pay tax means it is their ignorance. That ignorance has no excuse.
So 3 years
If they
back we
want
had.
if they want to gift it, you have to pay the tax and you have to gift it. Whatever you want to do at your whims and fancies, you can do it. Nobody will stop you. But they are asking only the tax on your capital gains. No, that's all. So now what is the situation, madam?
So now they are showing the documents that his daughter has purchased the house, everything. But
Acha, but
assessing officer
54
is not convinced.
not convinced means they have to go
Yes.
for appeal and they have to try.
Yes, sir.
Because
see-
there is a procedure. If you have paid the cash, and how we will prove the same money is used for acquisition of that property, that he may litigate there in the interest of revenue. Right now,
So
madam?
now, yes, sir. So now what he did, whatever the amount which he had in his bank account, he transferred to his wife, and he's saying I'm bankrupt.
See
I don't have any money.
okay, that the law has its own way. They
Yes,
will
sir.
catch on. Why we have to worry? But as a professionals, we can say The liabilities you can never escape.
Yes, sir.
We want to pay SGST in cash. Whether can we maintain ITC balance and pay SGST? Definitely, by all means,
Yes.
the department will be happily garland you. You can keep your balance as it is and you can pay it in cash. No need of setting up. Allowables under section 83. Okay. It's already 8:30. When and where exams is conducted? Exams will be conducted online, sir. By the next week, the notification will come. Okay. Then you can book your exam schedules. Paulra G, stamp duty is allowed under section 8EC up to 1,50,000. Sir, whether the stamp duty is a savings, it is a cost of acquisition of a property. How it can qualify under 8EC? Madam?
Yes, sir.
A peculiar question is there. Can you kindly throw me light whether I am right or wrong?
It is.
Paul Raj has raised a question. Stamp
Yes.
duty is allowed under section 8EC up to 1.5 lakhs.
But now in new regime, 80C1 is not available, sir.
That's what actually I have amazed. Work from home for Dubai company in India. Payment received in Indian account. Can I treat this salary as salary or consulting income? Also under section 44 ADA. Sir, first you consult your employer or the payer. What expenditure he is going to incur in his books of accounts. Then you decide it. Straight away on your own, you cannot do anything. What he does, accordingly, you have to go. What you do, or either he has to follow. Paul Raji, I will unmute you. Could you talk? My dealer has filed the income tax return under 44 AD, but the bankers are insisting for balance sheet and P&L account. When we have not maintained the books of account, what is the remedy? Sir, if you have filed your income tax return, you cannot draw a balance sheet if there is no books of account. You can draw it as a statement of affairs. You can draw trading account, P&L account, and the statement of affairs, and you can submit it before the banker. Okay. If there is no proof of expenditure, you have to clearly write the expenditure head. Allowed expenditure as per Income Tax Act. Okay. There are many ways, sir. Diligently, you can all adopt these skills. Okay. WhatsApp, PDF by WhatsApp, yes, that all will be sent, don't worry. Okay. In case Dubai treated as salary means we need to pay income tax in India. Note, Dubai, there is no income tax. In income tax, if there is no income tax, if Dubai has entered into a DTAA, accordingly, if there is an exemption from income tax in Dubai and double taxation avoidance agreement is there, you can enjoy the same as it is. Right now, madam?
Yes, sir.
If taxes are paid there and there is a agreement, accordingly you can. If there is no tax and it is received here, you have to pay the tax here. And if there is no double taxation avoidance agreement, again that income received in India is to be taxed. Okay. Thank you, one and all.